Morning, friends. Okay, let's continue with our discussion. In the previous session, we have done one activity-based costing. Second, we did part of marginal costing. So, plan is to continue with the marginal costing discussion, and then I proceed to the next area. Before I start with this, any doubts on activity-based costing? Have you done those questions? Your institute material questions you're able to solve? Any doubts in those questions? And marginal costing, did you do those basics question from the question bank? Any doubts on that? If there are doubts, you can let me know. You can also get my number and then message me. I'll now move to the balance pending concepts which are there in marginal costing. I think some 6, 7 concepts are pending, and some of them are very, very important concepts. So I'll come to 16th concept, which is BEP with multiple variable cost per unit. Now let's first understand what does this mean. Now, what can happen is in a company, we learnt that BEP is equal to fixed cost by contribution per unit. But many a times, for example, this institute, the fixed cost is 2 lakh rupees, let's assume. But it's not necessary that it has to be 2 lakh when the students keep increasing. There's a possibility that 2 lakh can become 3 lakh, 3 lakh can become 4 lakh. So fixed cost by nature has to remain constant. But practically, for example, if I get more and more students, I may have to take one more building on rent. If I take it on rent, my fixed cost will go up. Fixed cost going up is concept 17, and variable cost changing. What is variable cost changing? If we have 50 students, the first 50 students, our printing cost will be 1000 rupees per student. But the next students we keep getting, our cost can go down. So the same product A will give me a contribution of 10 rupees initially, but later on will give me 12 rupees, or later on will give me 8 rupees, later on will give me 6 rupees, later on can give me 14 rupees. So, like we had multiple product scenario, here the same product gives different contribution. It doesn't give us the same amount of contribution per unit. In this case, we are going to solve it very simple. What we will do is we will say BP is the scenario where total contribution is equal to total fixed cost. That is what we will write. Total contribution is equal to total fixed cost. So I have to recover 10 lakh rupees. First 100 students gave me a contribution of 6 lakh rupees. Another 4 lakh rupees I have to get. Next set of students gave me some contribution. Like this, we will keep doing the calculation and check at what level our contribution will be equal to fixed cost. In case you have to calculate break even point. So what we are going to do is we are not going to apply any formula, because when I apply a formula, I have a problem. The problem is contribution per unit will be 10 rupees, 8 rupees, 15 rupees, 14 rupees. It will keep changing. Why does it change? Because my variable cost is changing. In fact, in practical world, even selling price can change. So a lot of changes can happen. Because of those changes, I have to now do a separate calculation. I cannot work with the calculation which we have given. This sometimes the question will say, what is the sales to earn a profit of 20 lakh rupees? In that case, total contribution is equal to total fixed cost plus 20 lakh. The formula can be used for sales to achieve desired profit, or the formula can be used for calculating break even point. Both can be done. We're going to use a formula called total contribution is equal to total fixed cost. When we do that, we will first sell some units, then the next units, then the next units. So we need to first equate total contribution to total fixed cost. Compute how much contribution can be earned from the initial set of units. There will be different set of units having a different variable cost, and then ultimately I'll have to find out at what level my total contribution would be equal to total fixed cost. When I do a problem, you'll understand it better, but the concept is very simple. Because there is a change in variable cost, there is a change in contribution per unit, you cannot apply your formula for break even point or margin of safety or sales to achieve. None of the formula will work because the denominator will keep changing. Similarly, I can have multiple fixed cost. Multiple fixed cost means if we have 50 students, our fixed cost is 2 lakh rupees. But if we have 100 more than 50 students, our fixed cost can be 4 lakh rupees. Then more than 100 students, our fixed cost can be 6 lakh rupees. We treat all of this as separate problem and solve it. You'll understand when I do a question. So every scenario, for example, a company can have cost of this three levels would be given. For each of the three levels, we'll treat them as three separate questions and calculate break even point, and then we will check whether that break even point is the real break even point or not. First understand the logic is very simple. Practically fixed costs do not remain constant. Though you can say, for example, at my home there could be a rent expense which is happening, but the rent expense also at some point can change, and at my home I may not need an extra building, but an academy like this may suddenly need one more building to be taken on rent. So when we are taking one more building on rent, our cost structure is going to undergo a change. So whenever there is a change in cost structure, I will not be able to apply the formula will get stuck there. So how are we going to do it? We are going to do it as total contribution is equal to total fixed cost, and when there are multiple fixed cost, we treat it as different problems and solve it. You will understand as we do it. Let's see questions on this so that you understand the concept better. I'll come to 12. Yamuna Limited manufactures a product currently utilizing 80% capacity with a turnover of 8 lakh at 25 per unit. As you read a line, you'll have to keep understanding things. 8 lakh divided by 25 is how much? 32. You also need to understand that 80% capacity is 32,000, which means 100% capacity is 40,000. 100% capacity is 40,000. Material cost 7.5, labor cost 6.25, semi variable cost including variable cost of 3.75, including variable cost of 3.75. 3.75 into 32,000 is how much? 3.75 into 32,000. So in this, fixed is 60, balance is variable. Fixed cost is 60,000, balance is variable. Variable is 1 lakh 20, fixed cost is 60,000 rupees. Then I have another fixed cost of 90. But the problem is, up to 80% level of output, fixed cost is 60 plus 90. 60 plus 90. But if you go beyond 32,000 units, if you go beyond 32,000 units, your fixed cost will further go up by 20,000. Will further go up by 20,000. Now I'll ask you formula for BEP. You will say fixed cost by contribution per unit. I'll ask what is the fixed cost. You have two answers. One is 1 lakh 50. Another answer is 1 lakh 70. What is 1 lakh 50? 60,000. Another 90,000. But moment I exceed 80% capacity, moment I go beyond 80% capacity, I will have another how many? 20,000 rupees. I'll have another 20,000 rupees. So now I am stuck because I don't know what is break even point. So what is fixed cost itself? So we will solve it as two different questions. One question fixed cost 1 lakh 50. Another question fixed cost 1 lakh 70. We will get two different answer. In that, one can be right, both can be right, both can be wrong. How to find right, wrong and all, I'll explain as we proceed. So till now I've explained that we have 32,000 units. We have 32,000 units. My variable cost is 7.5 plus 6.25 plus 3.75. All put together 17 rupees 50 paise. 7.5, 6.25 and 3.75. All put together 17.5. And my contribution is 7 rupees 50 paise. Contribution is 7 rupees 50 paise. Question wants us to calculate BEP. So BEP is very simple, fixed cost by contribution per unit, but I have two fixed cost. Then number of units to earn an income of 8% on sales. I'll apply sales to achieve desired profit formula. Desired profit plus fixed cost by contribution per unit or PV ratio. Desired profit plus fixed cost by contribution per unit or PV ratio. Again headache. The fixed cost changes. The fixed cost changes. Originally the fixed cost is 1 lakh 50. Then the fixed cost is 1 lakh 70. Then activity level to earn a profit of 95,000. Again there is a headache. Fixed cost changes. Desired profit plus fixed cost by contribution per unit. So let's start doing this now. All right. Question number 12. Start writing. Variable cost equal to 7.5, 6.25, 3.75. Variable cost equal to 7.5, 6.25 and 3.75. Fixed cost for 32,000 units. Fixed cost for 32,000 units. For 32,000 units. Till 32,000 it is 90,000 plus extra 60,000. How did 60,000 come? It has come from this level. The semi-variable cost including a variable cost is 3.75. 3.75 into 32,000 was variable. Balance is the fixed component. Balance is the fixed component. So fixed cost is 1 lakh 50,000. Fixed cost is 1 lakh 50,000. But then comes the problem here. The problem is if you go beyond, then it is 150 plus another 20. 150 plus another 20. 1 lakh 70. Now, to solve this question, we are going to treat them as independent problem. First problem is separate. Second problem is separate. There's no linkage. What is separate? 1 lakh 50 is one question. 1 lakh 70 is another question. So now write particulars 1 lakh 50, 1 lakh 70. Fixed cost, contribution per unit, BEP in bracket tentative. Why it is called tentative? I'll explain. BEP in bracket tentative. Fixed cost, contribution per unit, BEP in bracket tentative. Why tentative? What happens? You'll understand. So fixed cost is 150. Contribution is 7 rupees 50 paise. Divide and tell me the answer. 7 rupees 50 paise. Sorry, 20,000, 22,667. Okay, now this is like a cycle. Now what happened is, if fixed cost is 1 lakh 50, my volume has to be lesser than 32,000. If fixed cost is 170, my volume has to be more than 32,000. This answer is right because I'm getting a final answer lesser than 32. This answer is wrong. This answer is wrong. Listen, why this is wrong? If you say BEP is 22,667, then I'll say fixed cost is 1 lakh 50. I'll say fixed cost is 1 lakh 50 because below 32,000 fixed cost is 1 lakh 50. Above 32,000 fixed cost is 1 lakh 70. My final answer in the first problem, I should get less than 32,000. In the second problem, I should get more than 32,000. There can be a scenario that first problem gives you more than 32 and second problem gives you more than 32. First one is wrong, second one is right. First one is wrong, second one is right. There can be a situation there you get 20 here and you get 35 here. Both are right. Both are right. That both are break even point. At 20,000 also you will break even. At 35,000 also you will break even. So I should get an answer less than 32, greater than 32. If I get it, that is right answer. If I don't get it, then technically that is an incorrect answer. That is why the word used is tentative BEP. Tentative means it may or may not become the final BEP. It may or may not become the final BEP. Clear? Any doubts on this? Because when you tell me answer is 22, it's like a trial and error. You told me answer 22. I then will tell fixed cost is 1 lakh 50. When I say fixed cost 1 lakh 50, you will say answer is 20,000. 20 is okay because it is less than 32. Less than. How can I get 35,000 here? I would have got 35,000 if the cost here is, let's assume, 3 lakh. Just an imaginary number. If 3 lakh was the answer, here you would have got 40,000. So 20 is also right, 40 is also right. 20 is also right, 40 is also right, because one you are getting below 32, second one you are getting above 32. Clear? Any doubts on this? Next, same thing. Number of units to earn a net income of 8% on sales. Let's do particulars. Less than 32,000, greater than 32,000. Sales 25x. What is 25x? Is 25 into the number of units. 25 into the number of units. I'm doing a marginal costing format. Finally, my x has to be less than 32 and greater than 32. If I get it, answer is right. If I don't get it, answer is wrong. So sales is 25, variable cost 17.5x. Variable cost is 17.5x. Contribution is 7.5x. Now comes the change. Fixed cost in the first scenario is 1 lakh 50. Second scenario is now I need a profit which is 8% of sales. 8% of sales is 8% of 25x. 8% of 25x, which is 2x. So 7.5x minus 1 lakh 50 is equal to 2x. And this side 7.5x minus 170 is equal to 2x. This is called differential variable cost. Sorry, differential fixed cost. Get an answer for x. First scenario you will get an answer. Second scenario you will get an answer. 20, 270. This is right. Less than 32. Less than 32. This is a right answer. 27, 273. 30,000. Wrong. This will not work. This will not work. Only 27, 273 is right. Only 27, 273 is right. The second answer is not going to work because the issue is I wanted a profit of 8% of sales. When it is less than 32, I got an answer right. When it's more than 32, I'm getting 30,909, which means fixed cost will again become 1 lakh 50. Fixed cost will become 1 lakh 50. Third part I'm not doing, but I wanted a profit of 95,000, where the first one is invalid, the second one is valid. The first one becomes invalid. You will do this at home. 32,667 you are getting, which is invalid because I need an answer of what? Less than 32, greater than 32. This is called multiple fixed cost scenario. It is like three different questions or two different questions. Here you have two different questions. The question can say 50 students, this is the fixed cost. 100, 50 to 100, this is the fixed cost. 100 to 150, this is the fixed cost. So I can keep changing my fixed cost because practically fixed cost also changes at some stage. It doesn't remain constant. Clear? Any doubts on this? This is on when fixed cost changes, what happens. Now we'll see what happens when variable cost changes. Let's look at this question. A dairy product manufacturing baby food with a shelf life of 1 year. With a shelf life of 1 year. This is a very important information. What is the use of shelf life of 1 year is any product which has a limited shelf life. First, you will sell the last year production. That is, the opening stock will be sold first, and then only the current year production will be sold because I have limited life. Otherwise, it will expire. On 1st January, the company has an opening stock of 20,000. This I will sell first. This I will sell first. On this, my variable cost is how much? 180. Production is 1 lakh 20 last year, and in 2016 the production is 1 lakh 50. Then I will sell the current year production. Then I'll sell the current year production. First I will sell what? The opening stock. Then I'll sell the current year production. Opening stock has a variable cost of 180. Current year production has a variable cost of increased by 25%. So last year, whatever you sell, you will earn 120 rupees. Last year stock, whatever you sell, you will earn what? 120 rupees. Whatever comes from the last year, I will sell it first and earn what? 120 rupees. What is the variable cost in the current year? 225, and I will earn how much? 75. Now I'll say break even point is equal to fixed cost by contribution per unit. Fixed cost, only one answer is there. I'll explain that. But I ask you contribution per unit, you will say 120 as well as 75. 120 is for some units, 75 is for some units. So how do we sort this is what we are going to see in this segment, because your fixed cost changes, like that variable cost can also change. Read carefully and tell me what will be the total fixed cost of 2016. If you have understood marginal costing properly, you will give me answer this. What is the total fixed cost of 2016? Read it carefully and tell me from this line. Total fixed cost of 2016. You will make mistake also. I want you to go through it. Tell me what is the total fixed cost of 2016. Guys, right wrong doesn't matter. I want participation, please. How much? No, not 13 lakh 20. How did you get 1320? Sorry? No. This is the mistake I didn't want you to make. 99 lakh is the answer I was expecting, which is the wrong answer. And I didn't want you to make that mistake. Last class, initially I kept on shouting, saying that fixed cost per unit is a misleading data. Fixed cost per unit is a misleading data. Now listen, fixed cost per unit is what, how much? 60. 60 is on these units, not on the opening stock unit. 60 is on these units. So last year fixed cost is 60 is a wrong number. If you do 60 plus 10%, 66 and do 1 lakh 50, that's all, the problem ends there. You keep making mistakes, nobody can do anything. I have been telling that this chapter, only thing you have to have adequate control is how do you work with fixed cost and how do you work with variable cost. Yesterday when I gave you that excursion trip example, everyone was very clear. Today I asked this, most of us are struggling with it. That is where you need clarity. You will have to have full clarity on this concept, otherwise you will keep struggling in exam. So 60 is the wrong number. Last year it is 72 lakh. This year 72 lakh plus. Now I need to find at what level contribution will be equal to 7920. At what level contribution will be equal to 79 lakh 20,000, because at break even point total contribution is equal to total fixed cost. You cannot use the formula. What is the formula? Total fixed cost by contribution per unit, because the first 20,000 units will earn you 120 rupees. Will earn you 120 rupees. The balance units will earn you only 75 rupees. Will earn you only 75 rupees. First, any doubts on 72 lakh and 7920? 72 and 17. See, they purposefully gave this fixed cost per unit number because your mind will add that 60 plus 10% 66 and multiply with 1 lakh 50 and write 99 lakh. That is what ICI wants you to do. They are forcing you to make that mistake. You have to be very, very clear on the thought process. Any change in fixed cost means a change in total fixed cost. And I clearly told fixed cost per unit is a misleading number. It is a misleading number. Total variable cost is a misleading number. Variable cost per unit was given. I didn't tell you to do any change there. I directly started working with that. If that given me total variable cost last year, and then they say will increase by 25%. I'll not apply on total. First, I'll calculate the per unit, and then only I'll apply the 25% change. Any doubts on this? Now, right. Contribution per unit for first 20k units, 300 minus 180. First 20,000 units, 300 minus 180, 120. 300 minus 180, 120. Then contribution per unit for current year production. Whatever you produce in the current year and sell them. Whatever you produce in current year and sell, 300 minus 225. 120 rupees and 75 rupees. 120 and 75. Fixed cost of 2015. 1 lakh 20 into 60. 72 lakh. Fixed cost of 2015, 72 lakh. Fixed cost of 2016, extra 10%, 79, 20. Now I have a problem in hand. The problem in hand is I cannot divide by 120, I cannot divide by 75, and because it has a limited shelf life, we will first sell those 120,000 units and earn some money. Balance we will earn it from the next level. Now 7920 split into 2. First 20,000 units. First 20,000 units. First 20,000 units. This will give me 20,000 into 120. I will get 24 lakh. 20,000 into 120. I will get 24 lakh rupees. It doesn't end here. I need more money. 24 lakh is not what I need. So I need another 55 lakh 20. Another 55 lakh 20. My overall need is 79 20. I need another 55 lakh 20,000. How will that come? I don't know the number of units into 75. Tell me the units now. So how many units? 73 600. 73 600. First sell 20,000. Sell another 73 600. BEP is 93 600. BEP is 93 600. Original 20,000 120 rupees. Balance 73 600 at 75 rupees. At 75 rupees, my break even is 93 600. This is the question wanted break even. The question could have said I want a profit of 10 lakh, then add 10 lakh on top of this. And here not 55, you will write 65. You will end up writing 65. So you can do any type of a calculation. Whatever I am talking about break even can work for sales to achieve desired profit also. We have seen variants of BEP like multiple BEP, that is multiple products, plant merger we have seen, and now we have seen multiple variable cost, multiple fixed cost. This can go to sales to achieve desired. In fact, last question they said sales to get a profit of 8% on sales or profit of 95,000. So anything can happen in question. Any doubts on this? Okay, now I have a part called as decision making in my material. In this part, I am going to do the question. You are not going to do it. You are just going to be in listen mode. These questions, I have picked certain questions which are relatively tricky. That's all. There's no new concept I'm going to teach in this. These are relatively trickier questions. So I will discuss those questions. I will do certain part of the calculation so that you are able to absorb these trickier questions. That's all. These are slightly on the trickier side as compared to the normal question. But what concepts are we going to use? The earlier concepts only. or maybe from some other chapter. I may use a concept of labor chapter or a materials chapter or a overheads chapter in this area. So no new concepts I have to explain. Only two concepts are pending in this chapter. One is called absorption versus marginal costing, which many students struggle, and second something called as limiting factor. I'll discuss them as we proceed. Let's quickly discuss the decision making question. Company manufactures and sells three types of mobile handset. It also manufactures wireless charger for mobile. Company has worked out the following estimates for next year. Demand 54315, selling price, material cost and labor cost. To encourage the sale of a wireless charger, a discount of 10% in its price is being offered if it were to be purchased along with mobile. It's expected that customer buying mobile will also buy the wireless charger, will also buy the wireless charger. Now, 12,000 mobile have been sold by us. 12,000 mobile. So 12,000 wireless charger will be sold with mobile at the rate of 1,350. At the rate of 1,350. There is a 10% discount in the price. So sales of this company is 5,000 into 8,000, 4,000 into 9,000, 3,000 into 12,000, 12,000 into 1,350 and 3,000 into 1,500. Why I'm not doing, or why I don't want you to do, because a lot of calculations are there. So focus is understanding the, not the concept. There's no concept. It's just a trickier question so that a lot of things get discussed here. Company has a capacity of 35,000 labor hour. The labor is paid at what? This is a very important information. 500 per hour means 2 hours, 3 hours, 4 hours and zero point 0.4 hours. 500 per hour. So 1,000 means 2 hours, 1,500 means 3 hours, 2,000 means 4 hours and 200 means 0 0.4 hours. Can you multiply the units with this hours and tell me how many hours is needed? Because I have capacity of only 35,000. 5,000 into 2, 4,000 into 3, 3,000 into 4 and 15,000. Sorry? 40, 40,000 and I have only what? 35,000. So 35,000 hours you'll have to pay at 500. Balance 5,000 hours you'll have to pay at double the normal rate. You'll have to pay at double the normal rate. So balance 5,000 hours will be paid at double the normal rate. Material cost multiply. Other variable cost is 50% of whatever labor cost is there, and fixed cost is 1 crore. Balance is fairly simple. One is calculating the overtime premium. Calculating the overtime premium. How overtime premium is calculated? I have 35,000 hours, but when I do calculation, I need what? 40,000 hours. And second is how many charger with discount, how many charger without discount. So if you see the calculation here, first is hours required 40,000, 5,000 is overtime, 5,000 is overtime. As I said, 12,000 into 1,350 and 3,000 into 150. Material cost you keep multiplying as it is. Normal time, overtime, normal time and overtime. Overtime has to be paid at what? 1,000 and normal time has to be paid at 500. Normal time has to be paid at 500. You get your contribution. Balance is fairly simple. Anyway, you are going to practice this question later on. But when you read the question, understand where is the trickier part. So here the trickier part was one, calculating where the overtime is needed and how many charges at discounted price and how many charges at non-discounted price. Clear? Any doubts on this? Let's go to 15. An executive manager spends 10 per kilometer on taxi fares for his office work. He is considering two other alternative. One is a new Nano. Second is, other option is second hand Innova car. The estimated data: purchase price, sale price, repairs and servicing, taxes and insurance, petrol consumption, petrol or diesel. He estimates that he has to travel 10,800 kilometer annually. Which of these alternative will be economical? That is, for 10,800, if you use taxi, it's 10,800 into 10 rupees. If you use nano, 10,800 into somewhere here, 10,800 into plus the fixed cost. There is a fixed component, there is a variable component. I'll do the detailed calculation in a minute. Then it goes to 18,000. I'm not interested in these two. I'm interested in break even. At how many kilometer per annum will the cost of two cars break even? They are asking for break even point, which is fixed cost by contribution per unit. That's the formula. But now I have a headache. I am going to buy a car. Now, what is the break even point in buying a car? They're asking that. I'm not using it for commercial purpose, but they're asking what is the break even point of these two cars. I am going to buy the car, use it for my own purpose. I'm not going to earn any revenue, but still there is a break even point asked, and which is logical. What they've asked is also logical. How are we going to calculate? I'll explain. Can you first tell me, do the calculation, tell me, new nano, what is the total fixed cost including depreciation? Fixed cost including depreciation till this. First calculate depreciation and then add other items. Calculate depreciation, then add other items. Right, wrong doesn't matter. Please do the calculation. Sorry? Depreciation. This is 22. Depreciation is 22. 135 minus 25. Salvage value 135 minus 25. 22,000 plus another 12,000 plus another. Tell me Innova, what is the fixed cost number? Please calculate depreciation properly and then tell me. $44. What is the variable cost per kilometer? Per kilometer, how much will be the variable cost? I have highlighted those two items. Read and let me know. How much? This is 2.8, 3.4, 68 rupees for 20 kilometer, 68 rupees for 20 kilometer, and 42 rupees for 15 kilometer, 68 rupees for 20 kilometer and 42 rupees for 15 kilometer. Against this, I have one option. Go for Ola, no fixed cost, variable cost is 10 per kilometer. Variable cost is 10 per kilometer. You have a choice of taking an outside taxi like Ola. When you take that, there is no fixed cost, and the variable cost is 10 rupees. Variable cost is 10 rupees. Now listen, what is break even point is fixed cost divided by saving in per kilometer. Saving is like my profit. Fixed cost divided by saving in per kilometer. Like contribution, we have what? Savings in per kilometer. If I use my taxi or my car nano, every kilometer I'll save 6 rupees 60 paise. Every kilometer I'll save 6 rupees 60 paise. And if I use Innova, every kilometer I'll save 7 rupees 20 paise. I will save 7 rupees 20 paise. That will give me break even point. That will give me break even point. Fixed cost divided by saving per kilometer. Divide by saving per kilometer and not contribution. Or saving per kilometer is nothing but contribution per kilometer. Saving per kilometer is nothing but contribution per kilometer, because it contributes to my profit. My saving is indirectly contributing to my profit. So the formula is, this was the calculation for 10,800. I'm not bothered about it. Variable cost into 10 into whatever number you told. This is the fixed cost. Again, travel for 18,000, and this is the break even point. Contribution per kilometer is saving per kilometer. Contribution per kilometer is nothing but saving per kilometer. If you save more money, you will be able to attain early break even. What this means is, if you are going to travel less than 5,600 kilometers in a year, it is good to use outside taxi rather than bringing your own taxi. Rather than buying a car, you should see, for example, I'm going to travel only 100 kilometers in a month or only 50 kilometers in a month. No point in buying my own taxi, because I have to pay for driver charges, I have to pay for insurance, I have to pay for interest, all that I have to pay. Best is I book a Ola, I pay variable cost. When you book a Ola, you pay only variable cost. So when I have lesser volume, nobody is going to buy a car when the requirement is very limited. So here the break even is 5637 and 6167. Understand how the calculation has happened. Break even point here is fixed cost by contribution per kilometer, which is nothing but saving per kilometer. How much money are we saving per kilometer? Clear? Any doubts in this? Okay, let's come to this. This came in May 23 exam. A slightly trickier question. PQR Limited manufactures three products: product X, product Y, and product Z. The output for the current year is 2,50,000 of X, 2,80,000 of Y, 3,20,000 of Z, respectively. Selling price of X is 1.25 times of Z selling price. So X is equal to 1 point Z, and whereas Y is sold at the double the price at which Z can be sold. Y is sold at double the price at which Z is sold. Product Z can be sold at 20% profit, at a profit of 20% on its marginal cost. Marginal cost means variable cost. So first I'll have to calculate what is Z selling price. Once I calculate Z selling price, I'll be then able to calculate the selling price of X and Y. It came like that copper and plastic one example we saw. Similarly, they have worded this. They have said selling price of X is 1.25 times of Z and Y selling price is 2 times of Z. Whenever you read this type of question in exam, start writing. Without writing, you will not understand. Your mind cannot register all this very easily. So X is equal to 1.25 Z. Y is equal to 2Z. Now coming to the cost, 2016, 2024, 2016. This is the material cost and wages cost. Raw material used for manufacturing all the three products is same. Wages is paid at what? Now, when you read any information like this, you will have to see what is the utility of this. The utility is 4 per hour means this is 4 hours. This is 6 hours. 4 hours. Because 4 into 4, 4 into 6 and 4 into 4. What is the use? You will understand. Total overhead of the company is 52 lakh 80,000, out of which 1 per labor hour is variable. Out of which 1 per labor hour is variable. Indirectly, product Z has a variable overhead of 4 rupees. Product Z has a variable overhead of 4 rupees. X has a variable overhead of 4 rupees. Y has a variable overhead of 6 rupees. That into these units will give me the total variable overhead. The balance is the fixed. That will give me the total variable overhead, and the balance is going to be what? Fixed overhead. In the next year, I'll come to the next year in a minute. At this stage, what I understand is Z is 20 rupees plus 16 rupees plus another 4 rupees plus another 4 rupees. 20, 16 plus another 4 rupees. The cost of Z is 40. The cost of Z is 40. Selling prices at a profit of 20% on its cost. At a profit of 20% on its cost. So 40 rupees plus 20% profit. 40 rupees plus 20% profit. Z selling prices 48, Y selling prices 96, X selling prices 60. First part of the problem is over. The first segment of the problem is over if the last year data is analyzed. The last year. So what will I do for last year? 60 into 2 lakh 50, 96 into whatever 2 lakh 80, whatever the number of units, deduct its cost, finally deduct the fixed cost, and you'll get to know the profit for the last year. Then in the next year, sales of X and Z will increase by 12% and 15%. Y will decline by 5%. Total overhead is 55 lakh 8,000. Variable cost is 1 per labor hour. It's anticipated that all cost will remain same for next year, will remain same for next year. No opening and closing stock. Selling price will remain unchanged. Prepare a budget showing the current position. Current position is the last year and the position for the next year, indicating contribution and profit. Indicating contribution and profit. So how will we do is particulars X, Y, Z, selling price less variable cost per unit, contribution per unit, multiply with the number of units, you'll get total contribution, put the overall total and then deduct fixed cost from the total. Deduct the fixed cost from the total contribution. See, this is how the statement would be. Selling price 1696, 48. I get total contribution and I deduct the fixed cost and I get profit. I deduct the fixed cost and get the profit. Now, what will happen in an exam scenario is student is not able to get to this number itself. If you are not able to get to the 48, 60 and 96 number, balance parts will obviously become very difficult for you to proceed. So that is why the purpose of doing more practice is to ensure that you're able to tackle different type of questions. So when you do more practice, obviously in marginal costing, a lot of variety of questions can come in exam. Even if I do 50 questions now, in exam you may get a different question only. So at that time you need to have the presence of mind to tackle those questions. Clear? Any doubts on this? Then comes the rework scenario, which is almost similar. The number of units alone will change and I get to the profit figure. Clear? Any doubts on this? Any doubts on the concept? There's no major concept here. These were three different tricky questions which I said I'll discuss. There are more tricky questions in part 6 if you want. Part 6, that is, I have different parts. Part 1, I told you to see all the questions from my main book. Part 6, also if you have time, see all the questions. You may see some 6, 7 more questions could be there. So part 6 segment, if you can see all the question, it will give you more comfort. Part 1, full questions of this chapter, and part 6 full questions of this chapter. Other parts and all, I don't expect you to see all the questions. That is okay even if you don't see all the question. Now I'll be moving to an area called absorption versus marginal costing, an area where students have a lot of confusion. But let's first understand what is absorption costing and marginal costing. See, a company can have different types of cost. For I can have cost called production, non-production. What is production and non-production is? Non-production is administration overhead and selling and distribution overhead. Production is direct material, direct labor, direct expense and production overhead. I'm using the word production cost, not overhead. Production cost, non-production. This can be variable, fixed, variable, fixed, variable production overhead, fixed production overhead, variable non-production. So variable production cost, fixed production cost, variable non-production cost, fixed non-production cost. Let's take an example. 16 rupees, 4 rupees, 3 rupees, 2 rupees. Ideally, I should not have per unit number, but let's assume question gives you per unit number. The question gives you per unit number. Only difference between absorption and marginal costing is to value inventory. To value inventory, how are you going to do valuation? Let's assume you have 1000 closing stock. If you are following marginal costing, this is not considered for inventory valuation. This is also not considered because non-production cost will not form part of my trading account. It will form part of my P&L account. And any item which is forming part of P&L account and not the trading account cannot be used for inventory valuation. So whatever closing stock is there, it has to be till COP. In my cost sheet chapter, till COP only the closing stock valuation can be done. Below COP, no item can be considered for closing stock valuation. So non-production cost are obviously not considered. Marginal costing says even fixed production overhead should not, fixed production cost should not be considered for inventory valuation. If you have 1000 units, the value will be 1000 into 16. The value will be 1000 into 16. Absorption costing says this I agree, but this I don't agree. I will consider not only variable cost, I'll also consider fixed cost for closing stock and opening stock valuation. What will be the end effect of this? The closing stock as well as the opening stock will be valued at 20 rupees in absorption costing and will be valued at 16 rupees in marginal costing, this will lead to difference in profit. This will lead to difference in profit because you are writing a different opening stock under different closing stock. This is what we are going to tackle in this segment. We are going to tackle this element in this segment, that what the concept says is, I have four types of cost: variable production, fixed production, variable non-production, fixed non-production. These two I have no problem. These two I have no problem. The problem is with that yellow highlighted one. The yellow highlighted one is where the problem is, because under marginal costing, we do not consider fixed cost for inventory valuation. In chapter 1, if you have read theory, you will understand there are two types of cost. One is called period cost and second is called product cost. So under marginal costing, all fixed costs are treated as period cost. Period cost means it's not considered for inventory valuation. So only item which can be considered for inventory valuation is variable production cost. Variable production cost. Here variable as well as fixed. Variable as well as fixed. Clear? This is the crux. The crux is this. I have a format and all, I'll discuss later. XYZ had a marginal costing profit of 128,600 in April 2018. 128,600 marginal costing profit. Opening stock is 1,600. Closing stock is 1,150. Company is considering a change to what? Absorption costing. Fixed overhead absorption rate is what? 4 per unit. If you shift to absorption costing, I don't know what is the variable cost and all, they have not given. But anyway, absorption costing as well as marginal costing, the variable cost will remain same. Only change happens in the fixed cost part. If you shift to absorption costing, opening stock will go up by 6,400. Opening stock will go up by 6,400. Why will opening stock go up? Because absorption costing values the inventory higher. Closing stock will go up by 4,600. Closing stock will go up by 4,600. If opening stock increases, my profit will go down. If opening stock increases, because opening stock is debited in the P&L. Opening stock is debited in the P&L. So from 128,600, 6,400 is gone. Profit will go down. Profit will go down because of what? Opening stock going up. Because of the opening stock going up. But closing stock going up, I'm very happy. If closing stock goes up, because closing stock is recorded in the credit side. It's recorded in the credit side. This will increase my profit by, and this will give me the profit under the other method. This will give the profit under the other method. Again, I'm repeating, under absorption costing, fixed cost is also considered for inventory valuation. Fixed cost is also considered for inventory valuation. Under marginal costing, only the variable cost is considered. Only the variable cost is considered. Fixed cost is ignored. Fixed cost is ignored. So what's the number you get? Minus 64 plus 46. 126,800. Now, when sales exceed production, when sales exceed production in units, then profit under. Ignore these items as of now. When sales exceed production, think and tell me, if sales is more than production, closing stock will be more than opening stock or closing stock will be less than opening stock? Think and tell me. Closing stock, will it be less or more than opening stock? Closing stock will be lesser than opening stock, because I had opening stock of 1,000 and my production is only 10,000. I sold more than production means I've also sold the opening stock, part of the opening stock. So my closing stock will now become lesser than opening stock. If closing stock value is going down, then absorption will suffer. Then the absorption costing will suffer. Why will it suffer? Because debit side opening stock impact will be very high and credit side closing stock impact will be very less. This is the crux. If a student has understood this MCQ properly, then only the concept is clear. What people think is I'll do more problems. No. Can you answer this MCQ confidently in exam is what is very, very critical. if my closing stock is lesser than opening stock, absorption costing is going to be unhappy. This is what happened in the previous question also. In the previous question, closing stock was lesser. If closing stock was higher, no, our profit would have been more in absorption costing. Profit would have been more in absorption costing. Now tell me which answer is right here. Which profit will be higher? Marginal costing is higher than that of absorption costing. Marginal costing is higher than that of absorption costing. Clear? Able to understand the difference? There's only one key difference. The major difference is only one, which is under absorption costing, I consider fixed cost for inventory valuation. Under marginal costing, we do not consider. We do not consider. Clear? Any doubts on this? Let's see a question now. Many a time student leave these type of question in choice, but I think we can still handle it. So let's see this now. XYZ has a production capacity of 2 lakh units per year. Normal capacity utilization is 90%. Standard variable production cost is 11. Fixed cost is 3 lakh 60. Variable selling cost is 3 per unit. Fixed selling cost is 270 per unit. Selling price is 20. In the year just ended, production is 160, sales is 150, closing stock is 20,000. Calculate the profit under absorption costing method, marginal costing method. Explain the difference in profit. So they have asked for this. They want us to calculate the profit under absorption costing, marginal costing, and also explain the difference. Difference is that reconciliation which I was telling you. Now let's read it again. Production capacity of 2 lakh per unit. Normal capacities 90% means 1 lakh. Variable cost is 11 per unit. Fixed cost is, this is the only place where 3 lakh 60 is fine, but you also read this as 2 per unit. What is 2 per unit? Is 3 lakh 60 divided by the units which we are planning. Divided by the units which we are planning. Why I want this 2 per unit, you'll understand as we proceed. This is the only place where I want fixed cost per unit. So 360 divided by 1 lakh 80, that's technically called overhead absorption rate, 2 per unit. Variable selling cost is 3, fixed selling cost is 270. Selling cost I don't want the per unit, only the variable production cost I wanted. Unit selling price is 20. Can you read this and tell me what is the opening stock? Is there any opening stock? Is there any opening stock? $10,000 units of opening stock will be there. Listen, what is this 10,000 is? Debit side is equal to credit side. Debit side is opening stock plus purchase, which is called production. Credit side is closing stock plus sales. Opening stock I don't know. Production is 160. Closing stock is 20. 150. I get opening stock of 10,000. Now what is the use of this opening stock is, under absorption costing, opening stock will be 11 plus 2. 11 plus 2. Under marginal costing, it will be only 11 rupees. It will be only 11 rupees. Under this 11 plus 2, and there it is only 11 rupees. Marginal costing is only 11 rupees. Clear? Any doubts on this? What is 11 plus 2? 2 is, I told you to get that number, 360 divided by 180. 360 divided by 180. Let's write income statement under absorption. Right along with me. Income statement under absorption costing method. Income statement under absorption costing method. Under absorption costing method, we have produced 1 lakh 60,000 units. So I'll incur cost only for 1 lakh 60,000. They are saying actual variable production cost is 35,000 higher than the standard. I wanted to incur only 1 lakh 60 into 11 rupees. 1 lakh 60 into 11 rupees. But unfortunately, I incurred more. I incurred more. How much extra we have incurred? 35,000. So in this year, closing stock will not be 11 rupees. It will go slightly more. It will go slightly more. Why? Because you have incurred extra 35,000. Extra 35,000. And this is variable cost. So it will impact both marginal costing as well as absorption costing. First item, variable production cost. Variable production cost 1 lakh 60 into 11 plus 35,000. 1 lakh 60 into 11 plus 35,000. Fixed production cost. Now, question has not given any extra information for fixed production cost. They originally said fixed production cost will be 3 lakh 60. I will still be writing 160 into 2 rupees. Where will the balance go? I'll explain later. 160 into 2 rupees only. There is another 40,000. Where will it go? I'll explain in some time. 160 into 2 rupees. We are not going to write 3 lakh 60. We are not going to write 3 lakh 60. Cost of production. 1 lakh 60,000 units. Cost of production 1 lakh 60,000 units. 1 lakh 60,000 units. Opening stock 10,000 units into 11 plus 2 rupees. 1 lakh 30. 11 is variable cost, 2 rupees is fixed cost. Closing stock now listen, closing stock should also be 11 plus 2 only, but unfortunately we incurred that extra 35,000. We incurred extra 35, so closing stock is divided by 1 lakh 60. 11.21875. 11.21875 plus 2 rupees. 11.21875 plus 2 rupees. We incurred some extra 35,000. See, practically some companies will say this 35,000 is abnormal and value it at 11 rupees itself. You can also value it at 11 rupees also if you want. I assume ICI solution would have taken 11.21875 plus 2 rupees. In case it's different, we'll see later. 11.21875 plus 2 rupees. I'm going to add. What is the 2 rupees is the fixed, and what is 11.21875? 1795 divided by 160. 1795 divided by 160. What is the closing stock value you get? 2,64,375. We have to subtract closing stock. Clear? I get cost of goods sold. All this is the format of your cost sheet. Cost of goods sold. If, listen for a minute, in case this extra 35,000 was not there, in case it was not there, then this divided by 160, 13 rupees, this divided by 10,000, 13 rupees, this divided by 20,000, 13 rupees, and this divided by 1 lakh 50. What is 1 lakh 50 is units sold. 1 lakh 50 is everything would have been 13 rupees. Everything would have been 13 rupees per unit in case that extra we had not incurred. In case we had not incurred that extra amount. Clear? Any doubts till this? Then variable selling cost, fixed selling cost. How much is the variable selling cost given in the question? Variable selling cost is 3 per unit. Listen, selling cost is only on unit sold. Selling cost is only on unit sold. So 3 into 1 lakh 50. 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 There is that extra 40,000. I'll explain in a minute what is going to happen to that extra 40,000. Fixed selling cost given in the question is 2 lakh 70,000. 270. And now listen, under absorption of fixed production cost, under absorption of fixed production cost. Listen for a minute, very important explanation. The issue with fixed cost is, if sales go down or production go down, my fixed cost does not go down. What happened in variable production? I wanted to produce 180, I produced only 160, I incur cost only on 160. Whereas here I wrote 160 into 2, 3 lakh 20, but in reality my cost is 3 lakh 60. In reality my cost is 3 lakh 60. The gap 40,000 is called under recovery as per chapter 4 of overheads. You will understand under recovery, over recovery there. It's technically called under recovery. If you produce more, it is called over recovery, and instead of adding here, I'll subtract here. See, what we do is, I'll be writing 40,000 here. Reason for writing this is, if you write it here, then it will form part of COP. If it forms part of COP, it should be considered for inventory valuation accordingly. So the inventory value will change in case you write it in the top. It is not then 2 per unit. It will become 2 rupees 20 paise or 30 paise per unit. So costing says that in case you have under recovered something or over recovered something, don't write it in the top, write it in the below COGS, below the COGS. If this 35,000 also I don't want to consider here abnormal, then this will also come down. This will also come down, and we'll call it as under recovery of variable production cost. Under recovery of variable production cost. What is under recovery is, I did not recover it from the customer. I did not recover it from the customer because I fix my price thinking that my cost is 13 rupees. Then suddenly I get a surprise that my cost is 14 rupees. I cannot go back to the customer and tell that please pay me more now. No customer is going to pay me more because price is fixed at the beginning of the year. That is why under recovery or over recovery happens. Under recovery is my loss, over recovery is my profit, but I'll get to know only at the end of the year. Only at the end of the year. Then write under absorption, which is 360 minus 320. Under absorption, 360 minus 320. That's all. It ends here. Cost of sales, profit, and sales. Profit and sales. Sales is I think 1 lakh 50 into 20. Clear? Any doubts on this? Now I'm going to do in marginal costing, which you need not do. I'll just explain it quickly. Marginal costing is going to be the same format. Sales less variable cost, contribution, less fixed cost, and profit. So when it comes to marginal costing, we have got this under absorption costing. You got this 40,000 here. You got this 40,000 here, and then accordingly we got it. Under marginal costing, sales is this 30 lakh. Sales is 30 lakh. Variable cost, I'll write a note. What does the note say? Variable production cost 1795. Variable production cost is 1795. Add opening stock 10,000 into 11 rupees. 10,000 into 11 rupees, not 13 rupees, not 13 rupees, because under marginal costing only 11 is considered. Under marginal costing only 11. So 1 lakh 10. Closing stock is 10,000 into, sorry, 20,000 into 11.21875. 11.21875. So 1795, add opening stock, less closing stock, you get variable COGS, add other variable cost, total variable cost, add other variable cost and total variable, and deduct fixed cost. No concept of under recovery, over recovery and all, because we don't recover fixed cost there. We don't recover fixed cost. So no concept of under recovery, over recovery. The profit is 239, whereas your profit was 259. The reason is opening stock has a difference of 20,000. Closing stock has a difference of 40,000. Absorption is very happy with this. Marginal is very happy with this. So that is why the 20,000 profit difference is coming. The 20,000 profit difference is coming because of this 20,000 difference in opening stock and 40,000 difference in closing stock. Indirectly, the 2 per unit. What matters is 2 per unit. If it comes as an MCQ, they may ask an MCQ like I showed, where they may say profit under this is this much, profit under the other method will be how much, giving 2, 3 options. Clear? Any doubts on this? Able to understand the crux? The crux is here I have to do this under absorption or over absorption, under absorption or over absorption, and consider this 2 per unit for inventory valuation. Consider the 2 per unit for inventory valuation. Also, this extra 35,000 I have considered normal. If you say it is abnormal, then inventory will be only 11 plus 2, not even that 11.21875. It will only be 11 plus 2. 11 plus 2. Clear? Any doubts on this? Able to understand this? This is the crux difference between absorption costing and marginal costing. I have seen many students struggling with this because they are not understood the crux. Crux is very simple. Under marginal costing, fixed production cost is not considered for inventory valuation. Everything else is same. Variable production cost, both yes. Fixed production cost, marginal no. Absorption, yes. Marginal no. Absorption, yes. Variable non-production, both no. Fixed non-production, both no. So there are no problems with any of the other items. The only change comes in this. Clear? Any doubts in this? Okay, now I'll be moving to the last concept which ICI has tested in the last 3-4 exams. Every exam a question has come from limiting factor, and unfortunately the question complexity is also slightly on the higher side. But this is an area which I cannot leave it. So I in fact will practice 3-4 questions in this. Let me first explain what is limiting factor. A limiting factor is one whose demand is more than its supply. That's the definition. What is demand is more than its supply? I technically have 4 factors of production: men, material, machine, money. For example, in this room, I can accommodate, let's assume 25 students. If that's the maximum students I can accommodate, and if demand comes for 50 students, then space is my limiting factor. Space is my limiting factor. If demand, see, the primary limiting factor for any company is demand. So if you are able to meet the demand, then there is no other limiting factor in the company. For example, I showed you that example of that mobile phone example where we wanted 40,000 hours, but 35,000 hours were only available. Balance I could do overtime. But if that question had said balance you cannot do overtime, then you cannot meet that demand. What you have to do is you have to cut one of the product, either cut the wireless charger or cut the mobile phone, something you have to cut and then only meet the demand. You cannot meet the demand of the customer because you do not have adequate men to meet the demand. That is called limiting factor. So the primary limiting factor for every company is demand. If demand you can meet, then check whether you have adequate men. Men means labor. Machine, adequate machine hours. Money, do I have the capital? For our academy like this, space, is the space available or not? Second, faculty available or not? So there can be multiple factors which can be constraining. Once you identify that you have a problem in hand, then you have A, B, C, three products customers are asking. You have to voluntarily forego some of the products. You have to voluntarily forego some of the products and say, sorry, I cannot meet your demand because I do not have adequate capacity. I cannot meet your demand. You are asking me, you are asking us for CA inter classes, CA final classes. We are saying, no, we cannot provide you because we do not have faculty availability. So somewhere I'll have to voluntarily go until I cannot meet the demand. I cannot meet the demand. That situation is called as limiting factor. So limiting factor is one which will constrain or limit the level of activity, constrain or limit the level of activity. This is an area which many students find it very difficult, so I'm going to go very slow. In case there are doubts, you let me know. For every company, demand will be the primary limiting factor which constrains the level of activity. Constraint means I will not see, there is no point in producing more than the demand. If people are not there, I cannot say that I'll open one more branch when demand is not there for the first branch itself. What's the point of opening second, third branch? So if demand is not there, you cannot produce more. So first is demand. However, sometimes despite having demand, will not be able to meet it due to what? Limited supply of men, material, machine. During COVID, raw material became a limiting factor because raw material availability was not there. We were not able to procure it. So anything can become a limiting factor. There was huge demand for your COVID essentials. People were asking for sanitizer, people were asking for masks, but there is a limit to the extent I can produce, no, because my capacity is only that much. Demand is there, but I'm not able to produce mask at that time. I'm able to produce only to some extent. Hence, limiting factor is one whose demand for the factor is more than its supply. Let's assume you have four products: profitable, 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 profitable. 40 rupees, 30 rupees, 50 rupees, and 60 rupees. Then what should I do? I need to find what is the limiting factor. If labor is the limiting factor, you should calculate contribution per labor hour. If labor is the limiting factor, you should calculate contribution not per unit, contribution per labor hour. If machine is the limiting factor, you should calculate contribution per machine hour. If space is the limiting factor, contribution per square feet, contribution per square feet. What is limiting? If money is the limiting factor, contribution per rupee of investment, contribution per rupee of investment. So I need 2 hours, 1 hour, 4 hours, and 8 hours. Product D gives me 60 rupees. Very happy. Highest margin. Highest margin. I'm very happy with it. But then I get to know it needs how many hours? 8 hours, which means it will earn me 7 rupees 50 paise per hour. 7 rupees 50 paise per hour. This will earn me 12 rupee 50 paise. This will earn me 30 rupees. This will earn me 20 rupees. I will prioritize selling product B first. Product B has the lowest contribution per unit but highest contribution per labor hour. Has highest contribution per labor hour. The logic is very simple. Labor is a precious resource of mine. So I will use it only where I get maximum out of the labor. I can get 30 rupees if I tell him to produce product B. Whereas I'll get only 20 rupees per hour if I tell him to produce product A. I'll get only 12 rupees 50 paise if he produces product C. And I'll get 7 rupees 50 paise if he produces product D. So my priority is this. Rank 1 is lowest contribution per unit. I have given the example in that manner. Lowest contribution per unit, but what? Highest contribution per labor hour. He is the most important person for me. I will produce first product B. Still have availability, then I'll produce product A. I still, for example, I have 80,000 hours. Sorry, 80. 1 lakh hours. I have 1 lakh hours. I first to produce product B. I still have hours. I produce product A. I still have hours. I produce product C. Product C, I'm not meeting the demand fully. Product C, I'm not meeting the demand. The demand data and all is not there in the question. Let's not worry about it. This is just an example for you to explain the concept. So I will prioritize in this order. So the question will say that this many hours we have. Tell me what should we produce? What should we produce? Clear? This is one type of a question. The second type of a question is I have demand. I can produce on my own, or I can get it outsourced from some other party. I can get it outsourced from some other party. In this case, if you come and ask us for classes, we will say yes. Any classes you ask, we will say yes. If we do on our own, we earn more. If we do it from an outside party, we earn slightly lesser. We earn slightly lesser, but in both the situation, we are going to earn money. We are going to earn money. So, in case there is an option available for make or buy, there's an option available for make or buy. I'll compare something called as cost of making the product with cost of buying the product. If cost of making is cheaper, I have to make it in-house. Cost of buying is cheaper, I'll obviously buy it from outside. I'll obviously buy it from outside. If assume cost of make is cheaper, but still you do not have capacity, still you do not have capacity, in that case, again, you have to do a statement of ranking, but the ranking is not on contribution. The ranking is on savings per unit. What is savings per unit is, if you make it internally, how much money you save, and if you make it externally, how much extra are you paying. You will do something like that and do a ranking, and then do allocation, and again meet the demand. See, if make or buy is possible, student asks us anything, we will say yes, we will give you. We will give you. We will never say no to anything, because either we will do it on our own, or I'll tell my friend or someone else to do it. If my friend does, my cost structure goes up. If I do it internally, my cost is lesser. But to the student, we will say yes, we will never so will never say no for any demand. So demand will be met. Demand will be met. How are we going to meet the demand is the question now. That is through allocation process. You will understand the allocation process when we do. Clear? Any doubts on this? These are the only two concepts. The first concept is you do a statement of ranking when you do not have a make or buy option, and do an allocation. If you have a make or buy option, you will again do a statement of ranking, but that is on savings per unit. That is on savings per unit and not contribution per unit. Not contribution per unit. You will understand this when I do a question. There's one last concept which is called price elasticity of demand. You will see this in economics. There was one question where this had come. What is price elasticity of demand says is, if elasticity of demand is 1, if elasticity of demand is 1, in one question they asked this. Today I am selling 8,000 into 20. Sales is 1 lakh 60. Next year, I reduce the price to 16. I reduce the price to 16. Question said elasticity of demand remains 1. Elasticity of demand remains 1, which means sales will remain same 1 lakh 60. Sales will remain same 1 lakh 60. Elasticity of demand is 1 means there is no change in sales, which means units will now go up to 10,000. This was a concept which got tested in one question by ICI. There's one small MCQ around it. You will understand it. I'll now focus on limiting factor question. We'll focus on the limiting factor questions. Let's go to the questions there. Division Z is a profit center which produces 4 products A, B, C, and D. Each product is sold in the external market. Data for the period is market price, variable cost per unit, labor hours required per unit, maximum demand. Identify the production pattern if you have 20,000 hours and 30,000 hours. So it's a very simple question. This is just to get started with the concept of limiting factor. I have demand for 4 products. 2,800, 2,500, 2,300, 1,600. First, I need to check whether a product is profitable or not. Product A, Contribution positive, negative. What will be the contribution per unit of product A? Tell me the contribution. Guys, you'll have to participate. You're right only. Tell me. 20 rupees. Product B, 46. Product C, 50. Product D, 45. All are profitable product. So if I do not have any constraint, my production pattern is 2800 of A, 2500 of B, 2300 of C, and 1600 of D. If I do not have any constraint, if I do not have any constraint, meet everything, meet demand of everything. Let's understand how many hours needed, right? Hours needed, right. Hours needed equal to, hours needed equal to 2800 into 3, 2500 into 4, 2300 into 2, 1600 into 3. How many hours? Okay. Moment I see 27,800, part B of the question is over. Why part B is over is we have how many hours? Answer is produce this 2800, produce it fully, produce all the four fully. Where is the problem? The problem is when you have 20,000. If you have 20,000, you need to tell me which product do I compromise, A, B, C, or D, because I have to prioritize some product and compromise some product. I don't have a choice. I don't have a choice. I need to prioritize certain items and compromise on certain item. Which product do I compromise is what we are trying to find. That is what limiting factor is all about. Clear? Now write statement of ranking. Part 2 is over, okay? Statement of ranking, particulars and for product. Statement of ranking, product A, B, particulars and for products. Selling price less variable cost, contribution per unit, contribution per unit, labor hours per unit, labor hours per unit, and contribution per labor hour. Contribution per labor hour. Because labor is the limiting factor. I do not have adequate capacity of labor, availability is limited. Let's write it 150, 146, 140, 130. Contribution per unit. And I get contribution per labor hour. Ranking. Contribution per labor hour. And based on this, we are going to get the ranking. Ranking is very simple. Rank 1, rank 2, rank 3, rank 4. So what I will do is I'll first produce product C. After meeting the demand of product C, if I still have any labor, I will produce product D. If I still have labor, I'll produce product B. And if I still have labor, I'll produce product A. Obviously, all the four fully will not be possible. Fully will not be possible, but I may still go to the fourth rank product and all. Depends on how many hours we have. We have 20,000 hours. We will start allocating them now. Any doubts on this? Any doubts in this? Clear? Can we proceed? Clear? Statement of allocation. Product units hours consumed balance hours. The last column is not needed in this question, but some other question may ask you to calculate contribution. So I'm adding that column also. Contribution can come in some question. That is, they may ask you to calculate the profit of the company. Product units hours consumed balance hours and contribution. Which is the rank 1 product? C. What is the demand of C is 2300. 2300, and I will consume 2300 into 2, 4600 hours. I'll consume 4600 hours, balance I still have 15400. What is the contribution per unit of C? So 2300 into 50 rupees, I'll earn 1,15,000. I'm earning. I'm earning 1,15,000 with the first rank product. First rank product is giving me 1,15,000 rupees. Any doubts on this? Product C, 2300 units, 4600 hours gone, 15400 left over. Assuming question says company has 4600 hours, balance hours 0, problem over. You will only produce product C. Then I go to the next product, product D, 1600. 4800 hours consumed, left over 10,600. Leftover is 10,600. And this gives me a contribution of 1600 into 45. So I earn another 72,000. I earn another 72,000. I'll go to the third rank, which is B. Demand is 2500. I think fully possible into 4. We are still left with 600 hours. 2500 into 4. Into 4. What's the contribution per unit of product B? So this earns me another 1,15,000. Another 1,15,000. I go to the last rank. A full demand obviously not possible. A's full demand is obviously not possible because I do not have the adequate hours. So I will write hours consumed as 600. Hours consumed is 600. Units is 600 divided by 3 hours per unit. 600 divided by 3. 600 divided by 3 hours per unit. I'll produce only 200. Hours is fully closed. Hours is fully closed, and this earns me 200 into 20 rupees. You can put a total for column 3 and column 5. 3,06,000 you earn. And if they ask you to calculate profit, just write less fixed cost, deduct it in the last column and get the profit. I can earn 3,06,000 rupees in this production pattern. In this pattern, I'm going to earn 3 lakh 6,000 rupees. No other production pattern can give me this money. 3 lakh 6 is the best I can earn. 3 lakh 6,000 is the best I can earn, and I'm going to earn that through this mix. Same question I can change and say you have 15,000. If you have 15,000, C fully, D fully, B partly. B partly, A not no production. A there is not going to be any production. And if you have only 8,000 hours, C fully, D partly, B and A no production. B and A no production. Clear? Any doubts on this? Okay, let's come to this. Moon Limited produces products X, Y, and Z and has decided to analyze its production mix in respect of these three products X, Y, and Z. Direct material, variable overhead per unit, direct labor, hours per unit, department A, department B. I'll have to multiply with these to get the labor cost. From the current budget, further details are as follows. Particulars, annual production at present, estimated selling price, sales department estimate of possible sales in the coming year. There is a constraint in supply of labor in department A, and its manpower cannot be increased beyond the present level. Identify the best possible product mix, calculate the total contribution from the best possible product mix. First thing is, it's exactly same as what we did, only one data they have given in a slightly different manner. First, I'll be doing a statement of ranking. In my ranking, this is my selling price, variable cost is direct material, variable overhead, department A into 4 rupees, department B into 8 rupees. I'll get contribution per unit divide by department A hours per unit. I'm not bothered about department B. I'm not bothered about department B, and contribution per labor hour of department A. Contribution per labor hour. Only data they have not given directly is how many labor hours do we have, which is basically calculated based on this. Why we calculate based on this? Because saying there is a constraint on supply of labor in department A and its manpower cannot be increased beyond the present level. Beyond the present level. What is the present level? 10,000 into 6 hours, 12,000 into 10 hours, and 20,000 into 5 hours. What you need? 12,000 into 6, 16,000 into 10, 24,000 into 5, which is obviously not possible. Which is not possible because I do not have labor. I do not have labor. Last question they said labor available is 20,000. This question labor available number is not given. But they have said labor available is equal to the present production, is equal to the present production. And in this also I'm only focusing on department A. I'm least bothered about department B. I'm least bothered about department B. There is extra demand, but obviously I cannot meet it. I cannot meet it because I have constraint. I have constraint on the availability of department A labor. Now right, working note 1. Labor availability. Labor availability. Labor available equal to 10,000 into 6, 10,000 into 6, 12,000 into 10, and 20,000 into 5. How much? Now your job is, last question I said allocate 20,000 hours. This question you have to allocate 2 lakh 80,000 hours. In that, I don't know what is the priority. Is X our priority, or Y our priority, or Z our priority? That will come from statement of ranking. That is going to come from statement of ranking. Next, statement of ranking. Particulars, product X, product Y, product Z. Three one two 400 240. Selling price 312, 400 and 240. Variable cost, I'm quickly doing a calculation, 160 plus 8 rupees plus 8 rupees plus 6 into 4, 6 into 4 plus 6 into 4 and 6 into 8, 6 into 4 rupees and 6 into 8 rupees. Tell me what is the all cost? 160 plus 8, 6 into 4, 6 into 8, 2, 240, okay, 240. Then 120 plus 20 plus 10 into 4 plus 15 into 8. In exam, you can do a separate note for this, but in class, I'm quickly closing it. 120 plus 20, 300. Z, 80 plus 12 plus 5 into 4 plus 11 into 8. These will be your numbers: 72, 140, 72, 140. Number of department hours. Assuming you are done with this ranking, I want you to attempt allocation. I want you to attempt the allocation step. Assuming the ranking is done by you properly, one, you can just write the numbers. Contribution 70 to 140, 70 to 140. These are the numbers: 70 to 140, 6, 10, 5, 12, 10 and 8, 1, 2 and 3. Now listen for a minute. In this question, if you see, they have asked for contribution also. That is why I said one contribution column, we'll add it even in the previous question. Now you start doing, this is the demand: 12, 16 and 24. You do allocation step. Allocation of 2,80,000 hours. Allocation of 2,80,000 hours. You attempt it, I'll discuss. Let me know if there's a doubt, I'll clarify any doubt. 2,80,000 hours, new demand. You'll have to work with the new demand. 12, 16 and 24 is the demand. Do the allocation. 12,000 first you will meet of X, extra available 16,000 of Y available, then you'll go to Z. This will be the answer. 12,000 of X, 16,000 of Y, and leftover, I think only 9,600 of Z. And we will earn 28 lakh 48,000 in this process. Is there a doubt? If any number there is a confusion, do let me know. Any doubt? No point in copying the solution at all. You do it later at home also. Anyway, you're going to practice these set of questions again, so no point in copying the solution. Anyway, the reason for giving solutions is very simple, because otherwise the focus will only be on noting things. I don't want you to do that. Clear? Any doubts on this? Done? Can you proceed? We'll move to question 20. SR Limited, this is a slightly different question. It's on limiting factor only. This came in May 22 exam. Almost all the exam questions, question on limiting factor is coming. Is a manufacturer of garments. For the first 3 months of financial year 22-23, commencing on 1st April 2022, production will be constrained by direct labor, will be constrained by direct labor. Only 12,000 hours will be available in each month, will be available in each month. For market reason, production of either of the two garments must be at least 25% of the production of the other. Now this is slightly tricky. What they are saying is, if you are producing 100 shirts, you should at least produce 25 shots, because 25% of the production of the other. Or if you prioritize on shots, if you produce 100 shots, 25 shirts have to be manufactured along with that. The order is very clear. They are saying production of either of the two garments must be at least 25% of the production of the other. Estimated cost and revenue per garment is given here. This is not the right number for us. I add back the fixed over it. Contribution is 22, 24. Contribution is 22 and 24. 22 units, 22 per shirt and 24 per shorts. Direct labor at 8 per hour. Direct labor at 8 per hour, which means to produce one shirt, you need 1 hour. But to produce one shorts, you need only 0.5. You need only 0.5, which means the contribution per hour is 22 and 48. 22 and 48. In half an hour, you will earn 24 rupees. In half an hour, you will earn 24 rupees. So 24 divided by 0.5. 24 divided by 0.5. As of now, I've understood labor is the limiting factor. My priority would be to manufacture shots. My priority would be to manufacture shots. But it's not that you can keep manufacturing shots, because they are saying 25% of the product, because maybe customer who is coming will ask for both the products together. So they are saying it should at least be 25% of the production of the other product. I can prioritize shirts and then do shorts, or I can prioritize shorts and then ranking is saying shorts is a better product. Ranking is saying shorts is a better product. For the month of July 2022, direct labor will no longer be a constraint. So from July 2022, no problem. From July 2022, starting from April, May, June, 3 months I have problem. 3 months I have problem. For the 3-month period, I have only 12,000 hours of direct labor. I have only 12,000 hours of direct labor. If you give me a choice, I will manufacture only shorts. But the problem is they are saying you need to produce 25% of the other. Company expects to be able to produce 15,000 shirts and 20,000 shorts in July 2022. So they're talking about July 22 when there is no problem. When there is no problem. No opening stock at the beginning. Sales volume will grow at 10% per month. 10% per month cumulatively throughout the year. The company intends to carry forward finished garments sufficient to meet 40% of the next month's sale from July 22 onwards. Estimated. Calculate the number of shirts and shorts to be produced per month in the first quarter to maximize company's profit. Prepare sales budget showing sales units and sales revenue. Production budget. I'm not doing this part of it. This you will learn when I go to functional budgets and budgetary control. When we do functional budgets and budgetary control, where I first prepare a sales budget. Based on the sales budget, we prepare something called as a production budget. What is production budget? Is sales plus closing stock minus opening stock is equal to production. So from July, I have no problem. From July, I have no problem. In fact, part 2 is very simple. What happened in exam is student didn't understand part 1. He didn't even attempt the part 2. He didn't even attempt the part 2 because part 2 very simple. They have said part 2 what? This is the sales of July. August add 10%. September add another 10%. Multiply with the selling price. So we are done. Sales unit, sales revenue is done. Sales units and sales revenue is done. Production, sales, add closing stock, less opening stock. Because part 1 was very tricky, student didn't even attempt this. This was very simple. 15, 20, extra 10, extra 10, extra 10, extra 10. And you multiply with the selling price, you get the value of sales, and from sales add closing less opening, and you're kind of done with the production budget. This is the part 2 of the question. My focus is part 1. Now, in part 1, they have not told me what is the demand of April, May, June. Demand data is not given. If demand data is not given, I assume there is unlimited demand. I assume there is unlimited demand. So obviously, if labor is limiting factor, I cannot meet the unlimited demand. I cannot meet the unlimited demand. So I'll have to do a statement of ranking. Ranking, I am not allowing you to do it. After that, we will solve the question. This is my ranking. Rank 2, rank 1. Shorts is my priority. Shirts is my second priority. Shirts is my second priority. Now, if that condition was not given, I would have used all 12,000 hours to manufacture shorts. I would have used all 12,000 hours to manufacture shorts. Why should I manufacture shirts? Because demand is not given in the question. I assume unlimited demand. I'll produce which product? Only the rank 1 product. Only the rank 1. Why should I produce rank 2 product when I'm not able to meet the demand of rank 1 product itself? Now, you need not do it. Listen only. How will I calculate this production? Production of shorts is Y. Production of shorts is Y. Shirt is 0.25Y. 0.25Y. First product is, that is the second product is Y, and the first product is 25% of Y. How many hours I have? 12,000 hours is equal to produce a short, I need 0.5 hours. I need 0.5 hours. Plus, to produce a shirt, I need 1 hour in this question. To produce a shirt, I need 1 hour in the question. So 1 into 0.25. So this is into 0.5 and this is into 1. This put together, I will consume 12,000 hours. This put together, I'll consume 12,000 hours. Indirectly, my Y will turn out to be 12,000 divided by 0.75. Can you tell me the answer? So, shorts is 16,000, shirts is 4,000. Shorts is 16,000 and shirts will be 25%. If nothing was given in the question, no, shorts directly I would have done 24,000. That is only rank 1 product. Only rank 1 product. Understand here, the question says production of either of the two garment must be at least 25% of the production of the other. Must be production of the other. To produce one shirt, you need 1 hour. To produce one short, you need half an hour only. You need only half an hour. So my priority should be only this. Shirts will be 25%. Quantity of shots into labor hours per unit, quantity of shirts into labor hours equal to total labor hours. Zero point 0.5, 1 hour. In the end, 16,000 shots and shirts is 4,000. 16,000 and then shirts is 4,000. Clear? Any doubts in this? Any doubts in this? I cannot do proper allocation and all here because allocation means I will prioritize only rank 1. Only rank 1. But here only rank 1 will not work because the question is saying what? You need to prioritize both. You need. I could have solved it in this format also. I could have called this as first product as Y, second product as 0.25 Y, consumption is Y into 1, sorry, Y into 0.5 Y, and this is 0.25 Y, and put a total and get the same answer. You could have solved it in the same format. If you want, you can solve it in the same format. Net, my answer is very clear. My answer is going to be 16,000 shots and 4,000 shirts. Clear? Any doubts in this? Again, one important learning is if you find a very lengthy question, you're not able to understand, at least see which subparts you can answer. Part 2 was very, very easy, but students did not even attempt part 2 of the question because they struggled with the part 1 of the question. The moment saw part 1 of the question, my job here is to tell you how you can tackle the exam, not to keep on solving questions. So I can keep on solving the question, but part 2 is tricky. At least part 1 you can close. So part 1 is tricky, part 2 you can close. So you'll have to see all that. I think we have one more question which is on that make or buy. Let's close that. Let's come to 21. A company manufactures 4 products. The annual demand for product, selling price and variable production cost is demand, selling price per unit, direct material per unit, direct labor per unit, variable overhead per unit. Variable overhead are absorbed on machine hour basis at the rate of 1.20 per machine hour. Can you tell me 1.44 divided by 1.2 is how much? 1.44 divided by 1.2. 1.2. This is also 1.2. 2.4 divided by 1.2 is 2 hours. 2.16 divided by 1.2. This is the hours needed for every unit. This is the hours needed for every unit of production. This into this and add and tell me the total. 1.2 into 1 lakh 20, 1.2 into 1 lakh 86, 2 into 1 lakh 71, 1.8 into 99,000. 8 lakh 87, and I have only 8 lakh 15,000. I have only 8 lakh 15,000. So I have to say no to few customer. But then comes the surprise element. Part 4 says PQR can be bought at what rate? 21, 24, 48. 21, 24 and 48. So listen, I am not going to do ranking based on contribution. I am going to do ranking based on saving per unit. Saving per unit of limiting factor. In that, yes, please manufacture. Product is please manufacture because you cannot buy it from outside. In PQR, manufacture the product where you have maximum saving, where you have maximum saving. Balance, because I think there is a shortfall of some 72,000 hours. There is a shortfall of some, that 72,000 hours demand, you buy it from outside and give it to the customer. You buy it from outside and give it to the customer. To the customer, I will meet the demand. Customer, I'm not going to say no. No, I am not going to tell to any customer. I will meet the demand of the customer. My first priority, yes, manufacture and give it to the customer because yes, I cannot buy it from outside. Yes, I cannot buy it from outside. P, Q, R. If I save more in P, I'll manufacture P. If I save more in Q, I'll manufacture Q. If I save more in R, I'll manufacture R. So if you see here, saving in manufacturing and saving per machine hour. Saving per machine hour. I'm doing calculation. It's exactly the same thing, but I'm doing calculation based on what? Savings and not based on what? On the contribution. Contribution I'll come to in the end because the question will ask me for profit statement. The question will ask me for profit statement. I'm repeating here. Here you are asking me something. Last two product I told you no. I said I'm not meeting the demand because I did not have capacity. Now also I don't have capacity. But a friend of mine is ready to give me product. Is ready to give me product. But he is charging me extra 8 rupee 40 paise, extra 5 rupee 28 paise, extra 5 rupee 76 paise, which also I'm okay. Chick, in the end I need the product. In the end I need the product, but I will try to buy a product where I lose less, where I lose less. So my statement of allocation, I start with yes, then I go to P, then I go to Q, and ultimately I go to R. R, some part of the R's demand, I'll buy it from outside and give it to you. I'll buy it from outside and give it to the customer. Able to understand the difference? Here I'm working with saving per machine hour, saving per machine hour, exactly same calculation, no contribution. No, where will contribution come? Contribution will come here to calculate the total contribution and profit. For calculating the contribution and profit, see here, demand fully met, demand fully met, demand fully met, demand fully met. In this case, R alone, some units I manufacture, some units I buy it from outside, some units I buy it from outside. P, no buying from outside. Q, no buying from outside. Yes, no option of buying from outside. Why I'm not buying P and Q from outside? Because P and Q, if I make it internally, I save 4 rupees 80 paise, 4 rupees 40 paise. R, I save only 4 rupees 20 paise. So I was okay to forego part of R. I was okay to forego a part of the R's demand. Part of the R's demand I am foregoing. It's exactly the statement, but see the heading, statement of ranking for manufacturing. For manufacturing, I'm not doing statement of ranking from, in fact one time it came in exam where they did not give the selling price itself, but CA final they did not give selling price, they did not ask for profit statement, because I don't need the selling price to decide which product to manufacture and which product to buy. I need to compare only two things, cost of making and cost of purchasing. Cost of making and cost of purchasing. If cost of making is cheaper, make it in-house. Everywhere it is cheaper, but I do not have the capacity. So that is where what I did, I asked, I got to know that I can do certain items purchased from a friend of mine. That purchases 36,200. That purchases 36,200. If you make it internally, you earn 15 rupees. But if you make it from outside, you earn only 7 rupees. That's okay. Let me earn at least 7 rupees. Because otherwise, in the earlier question, what you were doing, you were not meeting this demand itself. You were not meeting the demand itself. Now you're meeting the demand and earning slightly lesser, only 7 rupees. You're earning only 7 rupees. So my first priority is manufacture. If that is not possible, then I go to my second priority. Second priority is buying it from outside. Clear? Able to understand this? I think with this, my limiting factor discussion is over. Frequently tested exam area. So do see these questions. I think we are kind of done with this chapter. Just give me a minute. So the chapter is broadly broken down into various parts. This part, I want you to solve all the questions if possible. BEP for multiple product, indifference point, shutdown point, differential, I don't expect you to do more. Decision making, if possible, do more question. One question you pick from absorption versus marginal. One, we have done it in the class. Pick one more question from your ICI SM or from that extra question bank and solve it. Limiting factor also almost done. I don't expect you to do more question. With this, my marginal costing part is over. We have spent around 5 hours and the entire marginal costing is over. So at this stage, we are kind of done with around 20 to 23 marks of the paper. I'll take a 15 minutes break and then we move to cost sheet chapter. We'll take a break and then resume. Okay, let's now proceed to one more chapter. I'm going to move to an area called cost sheet. From an exam point of view, it's an area which is frequently tested for 10 marks in exam. Almost all the papers in the past had a 10-mark question from this chapter. Even I think May 24, the MCQ part was not tabulated here. So there was a question there is what I heard. So almost the questions keep coming from this chapter. This becomes the base for the cost sheet, the base for the subject of cost and management accounting. Now, coming to what we do here in cost sheet is we are trying to find out cost of a product or a service. The costing, as such, the role of a costing is to find out the cost of a product or service. When you want to find out the profit of an organization, you prepare a P&L account. You prepare a P&L account. Similarly, if you have to calculate gross profit, you use it, you do it using a trading account. And if you want to calculate profit and loss, you do a P&L account. And if you want to know the financial position of a company, the financial position of a company is done through balance sheet. Similarly, I have something called as a cost sheet, which is going to help us in calculating the cost of a product or a service. Now, the initial part, before I come to the format of a cost sheet and all, let's understand that there are costs can be broadly classified as direct and indirect. I have two category of cost. The cost which is directly and economically identified. There's a definition. Directly and economically identified with an end product. For example, if I see the shirt, I can say cotton would have been used into it. So cotton is a direct material. Cotton is or a direct cost. Some tailor would have done the stitching. So tailoring charges is a direct cost. Tailoring charges is a direct cost. When you look at the product, you can tell what kind of cost would have been incurred. This shirt could have been manufactured in a factory. Rent could have been paid or may not have been paid. Own factory, not a own factory. I have no idea. So rent is an indirect cost. Rent is a indirect cost because I cannot directly trace it with this product. So first thing you have to identify, is it directly traceable? In the same shirt, I also use thread. Thread is directly identifiable, but not economically identifiable. What is not economically identifiable is, economically identifiable means somebody has to keep track of information. So I need an accountant or somebody who has to record how much thread is going into the making of a shirt. Assume 1 meter goes or 2 meter goes or 1.5 meter goes, slightly up slightly down, the company is not bothered. The company is saying whether you use extra 1 meter or lesser by 1 meter, our cost does not change. So approximately thread cost is 1 rupee per shirt. That's all. I'm not bothered whether you're exactly using that or slightly more or slightly less. Approximate calculation. Thread is not a direct cost. Thread is an indirect cost because I'm not bothered how much thread is going into the making of a shirt. I do not want to keep track. Economically identifiable means somebody has to keep record. You have to pay him money, but the benefit which you get out of that information is not great. Every information I maintain, for example, I maintain books of accounts, I maintain how much is my sundry debtor, how much is sundry creditor. There is a benefit I get out of it. So there is a benefit I get by maintaining records, and there's a cost of maintaining records. You don't maintain any records today. If I ask you last 1 month how much money have you spent, most of us will not have track of that, saying that I spent on this, I spent on this, I spent on this, because you are not mandatorily record to maintain, and you are also not seeing any benefit out of it as of now. As of now, you don't feel any benefit is there by maintaining that records. So that is why it is very, very critical that I have to understand whether it's economically identifiable. Cotton, half a meter up, half a meter down can change my cost. But thread, half a meter up, half a meter down does not make any difference. So practically, this is material, not raw material. I'm saying material, and this is immaterial cost. Immaterial means it's not a significant cost, and direct cost is mostly a material cost. Material means important part of my cost structure. Once you find out it is direct, then you need to tell nature of cost. What is nature of cost is, can you touch it? It is material cost. Is it a reward to your worker? It is a labor cost. None of them, it is a residuary category. Example, royalty. Royalty you cannot touch. Royalty is not paid to your workers, is not paid to your worker. But every car Maruti manufactures, it has to pay royalty to Suzuki. It has to pay royalty to Suzuki. So royalty is a direct cost, and it will come under the category of direct expense. So if you can, so nature is material cost, labor cost and expense. Group 2. Okay. Material cost, labor cost, and expense. I have three types of category: direct material, direct labor, and direct expense. Direct material, direct labor, and direct expense. So any cost I give you, first thing you have to identify whether it is a direct cost or a indirect cost. For example, I'll say raw material. Raw material is a direct cost. Raw material is a direct cost. Once you have identified, then you'll have to tell me, can you touch it? Direct material. If you can touch it, it is a direct material. Is it a reward to your worker? Direct labor. It's a reward to your worker. Direct labor. Both not there. Residuary category. Residuary category called as direct expense. Residuary category called as direct expense. This explanation is there in my theory material. This explanation is not there in the concept book, but it's there in the theory material. If you have decided it is indirect, if you have decided it is indirect, then you'll have to tell me, where is it incurred? Where means factory, office, or sales. Factory, office, or sales. For example, I tell rent. Rent you have decided indirect cost. Rent you have decided it is indirect cost. Then I ask you, where is the rent incurred? Where is the rent incurred? You say factory rent, factory overhead. If you say office rent, administration overhead. If you say sales showroom rent, then it is selling and distribution overhead. Then it is selling and distribution overhead. So I have to first find out, looking at the cost, is it a material cost or an immaterial cost, or is it directly and economically identified with the unit of production? Nobody wants to know how much thread is going into the making of a shirt, but I want to know how much time Taylor is working on this, because his wages is a material cost for me. So I want to know how much time he's spending on this. I also want to know how much cotton is going into this, how many buttons are going into this. Some information I want, some information I don't want. Buttons, if it's very immaterial, I say least bother. I don't want to track how many buttons are going. Anyway, it is standardized. I'll put a standard data and then proceed. I'm not going to keep track of that information. So you will have to identify direct cost and indirect cost. Once you identify that, direct means, I'll ask you nature. Nature means, can you touch it? Is it a reward to your worker, or is it a residuary category, or is it a residuary category? Indirect means, is it related to factory, is it related to showroom? Balance or residuary category. Balance or residuary. Administration means everything included. Administration will include everything other than factory overhead and selling and distribution overhead. Other than factory overhead and selling and distribution overhead. When I solve a problem, question will say rent. They don't give any idea what rent it is. You have to write your assumption. You have to write your assumption that it is assumed that rent is for the factory. Call it as factory rent, factory overhead. Call it as factory overhead. This is the broad classification. I have 6 items of classification: direct material, direct labor, direct expense, factory overhead, otherwise called as manufacturing overhead, otherwise called as works overhead. Different names are there: factory overhead, production overhead, manufacturing overhead, works overhead. I have administration overhead, selling and distribution overhead. Selling and distribution overhead. Once you are clear on the 6 categorization, I can then discuss the format of the cost sheet. Then we can discuss the format of the cost sheet. So you'll have to be aware of that there is a 6-way classification. Now, is this classification standardized? No. Practical world. I'll give you an example. Power and fuel cost. Power and fuel cost. For tiles manufacturing industry, power and fuel is a very important cost. If your one cost is 100 rupees, power itself will be 40 rupees for them. For that industry, power and fuel is a direct expense. For that industry, power and fuel is a direct expense. For some other industry, power and fuel can become a factory overhead. Power and fuel can become a factory overhead. And ICI also, some question they take factory overhead, some question they take it as direct expense. There also they have also don't have any consistency, because practically I can get extra information. When you solve a question, you don't get any extra information. I've given you information, you have to do the classification. But in a practical world, I will get to know whether it is a material cost, immaterial cost, extra information, all that I'll get, and then I'll do a change and classification. Royalty, I'll put it under direct expense. But if royalty is not paid for every unit of production and lump sum you're paying, you may also take it as factory overhead. You may also take it as factory overhead. So it all depends on extra information in a company. Without extra information, classification at times become little difficult. So assumptions are needed as far as this chapter is concerned. A lot of places assumptions would be taken. So my first categorization I've told you, I'm going to categorize it as direct, indirect. Indirect, I have first item called direct material. In direct material, we start with opening stock of raw material, add purchase, less closing stock. In purchase, you have to add all incidental expense to purchase. What is incidental expense to purchase? Is any cost incurred to bring the raw material to the factory. Any cost incurred to bring the raw material to the factory is part of direct material. Is part of direct material. Example, insurance for raw material in transit. Insurance for raw material in transit is part of direct material. Insurance for raw material staying in the factory is factory overhead. Insurance for raw material in the factory, for raw material in the factory till it reaches factory, everything is direct material. Moment it reaches factory, everything else depends on extra analysis. It can be direct labor, it can be direct expense, it can be factory overhead, it can be selling overhead, all that extra information. But till it reaches the factory, till it reaches the factory, it will form part of what? Direct material. So any cost incurred to bring the raw material to the factory will be part of incidental expenses. Example, carriage inwards, freight inwards, insurance in transit, octroi duty, GST, where credit is not, everything will form part of incidental expenses on purchase of material. I get my direct material. I get my direct material. Direct labor means reward paid to the direct workers. Who are direct workers? Who are directly involved in manufacturing of the product. There are set of people who are not directly involved. Example, storekeeper. A storekeeper, what is his job? He has to issue raw material, receive raw material, issue raw material, receive raw material. He is an indirect worker. He is a indirect worker. So his wages will not come as part of direct labor, will not come. Then where will it come? I'll ask, where is the cost incurred? You will say factory, go to factory overheads. Where is the cost incurred? Go to factory overheads. Then I have third category, direct expense. Anything which is direct but not direct material, not direct labor. Residuary means everything else. Residuary means, for example, in the shirt, I pay some ironing charges. I pay some ironing charges, not internally, to an external person. To an external person. If I'm paying ironing charges to an external person and I say it is a material amount, it will come under the category of direct expense. Immaterial amount will go to factory overhead. Immaterial amount will go to factory overhead. So this direct expense versus factory overhead is always a problem. It's always a problem. We just hope that we do not get such an item. I don't want that headache itself, because it is always a headache of classifying this properly. So that classification can become a challenge. The total of all of this is called prime cost. Prime cost is otherwise called as direct cost. This practical world should be 60-70 percentage of the cost of a product. For a product, my direct cost will be 60-70 percentage. Balances overheads. Balances overheads. In that, the first one is factory overhead, production overhead, works overhead, manufacturing overhead. Total is called gross works. Works means factory. Till all these costs are incurred in the factory. All this cost is incurred in the factory. That's why we call it as gross works cost. Add opening WIP less closing WIP. I'll get net works cost. This is otherwise also called as factory cost. Net works cost or factory cost. Earlier, when I was teaching maybe 5 years back, after networks cost, I had COP and then we were proceeding ahead. ICA in the latest cost sheet format has added 5 items in between. So I told you to classify something as direct, indirect, all that. All that is okay. But these 5 items, if there, you'll have to directly put it here only. You'll have to directly put it here only. First item is quality control. Quality control was earlier a factory overhead. Quality control was earlier a factory overhead, but now they have a separate item called quality control cost. So write it separately. Quality control is very simple. Test related to your quality. Primary packing. Now we have two types of packing. When I buy a bottle of Pepsi, there is a plastic bottle. On top of it, there is a label. There is a label. In the label, you may see sometimes an actor, sometimes a sports person, somebody's photo could be there. The purpose of the plastic bottle is to preserve the quality, is to preserve the quality. That label is to attract the customer. The label is to attract the customer. You may see that maybe a kid is going there and he sees a sports star, he gets attracted to that product. That label is called secondary packing. Label is called secondary packing. Secondary packing is to attract the customer. Secondary packing is to attract the customer. Will go under selling and distribution over it. Will go under selling and distribution. Primary packing is to preserve the quality. Is to preserve the quality. Primary packing is a separate line item. Earlier, this was part of direct material. Earlier, this was part of direct material, but now I have a separate line item. I have a separate line item on primary packing. Primary packing is to preserve the quality. Secondary packing is to attract the customer. The admin overhead, I said I classify as production, sales, admin. Admin is everything else. These guys are going to help production guys, sales guys. The admin guys, who is admin guy? HR person. HR person provides employees to production team as well as to the sales team. So they are going to help these people. If in admin overhead you can find something related to production separately, if you can identify, then put it here. You cannot identify, then write it as general and administration overhead. Write it as general and administration overhead. If you can identify something related to factory in the admin overhead, in the admin overhead can be anyone. For example, security person, they can be also part of my administration team, or HR person. All these people are doing the role of helping the production guy and the sales guy. So when they are doing this helping work, it is possible that this help could be done for factory people and you quantify separately, that you take it here separately. Balance, you put it here, general and administrative overhead. Balance, you put it as general and administration overhead. R&D cost is separate. And if you have any scrap, if you have any scrap in your manufacturing process, reduce it from the cost. Reduce it from the cost. You will get what? COP, cost of production. Add opening stock less closing stock, COGS. In this, I'll spend little bit time on this in some time. Valuation of closing stock is the only place where students make mistake. Be very, very clear. How do you value the closing stock? If you are not able to value the closing stock properly, you will end up making a mistake and that will have huge impact on your answer. COGS. The last question when we did that marginal costing, we told into 11 plus 2 rupees. That was valuation of closing stock. That was valuation. We indirectly followed FIFO method there. We indirectly followed FIFO method. I have FIFO method, weighted average. I'll discuss that in some time. I get my cost of sales, profit and sales. This is the broader format. I don't want to discuss much on the format. Format should be clear to you. We start with direct material, opening stock of raw material, purchase, incidental expense, less closing stock, outer column, direct labor, direct expense. I get prime cost. Add the factory overhead, you get gross works cost, that is gross factory cost. Add opening less closing, I get net works cost or net factory cost. Net works cost are the net factory cost. I have 5 line items: quality control, primary packing, admin overhead relating to production, research and development, credit for recoveries and scrap. I get something called as cost of production. Add opening less closing, COGS, general and administration, selling and distribution, cost of sales, profit and sales. This is the format we are going to follow. Certain formulae which you should be aware and certain points which should be very, very clear. GP means sales minus COGS. GP means sales minus COGS. Why I should be aware of this? There will be few questions where they will give some information and some would be missing. And they may say GP is 20%. You have sales, calculate COGS, some balancing figure will come out of this. So GP is sales minus COGS and NP is sales minus COS. Sales minus the cost of sales. There's something called as cost of goods available for sale. Cost of goods available for sale, which is nothing but opening stock. This is available for sale. This is, that is, if you want, you can sell your entire opening stock and entire production, entire opening stock and entire production. From this, you sell something which is COGS, cost. Okay, and what is unsold is closing stock. What is unsold is closing stock. So cost of goods available for sale has two formula. One, what was last year's stock, that is opening stock, and production during the year, cost of that, or what you sold plus the closing stock, that is debit side or the credit side. Debit side is called opening stock plus production, cost of production. I'm talking in rupee terms. You can talk it in unit terms also. And what is sold plus what is unsold. I'm not writing sales. Sales has a profit element. COGS doesn't have a profit element. So I have a formula: opening FG plus COP or closing FG plus COGS. And this formula, we had used it in that question when I was doing marginal costing, and I will use it at multiple places in cost sheet also. Opening stock plus production is equal to units sold plus closing stock. Labor cost, some question will use the word productive labor and non-productive labor. Non-productive does not mean time wastage. Non-productive means they are not doing production, but they are doing stores or purchase or some other work. They are doing some other work. They are not involved in manufacturing. They could be involved in something else. Productive labor is direct labor. Non-productive labor is a factory overhead. Non-productive labor is a factory overhead. The term labor means they are in the factory, because for your office and administration we normally use the word salary. We use the word salary. There we use the word labor. Reward paid to providers of capital. In capital budgeting in FM, you will learn that money comes from different sources. Money comes from equity, you have to pay equity dividend. Money comes from preference, you have to pay preference dividend. Money comes from loan, you have to pay interest. Costing is saying, I'm least bothered whether you pay this or you don't pay this. It is not part of the cost. It is not part of the cost. So if question says equity dividend paid, ignore. Preference dividend paid, ignore. Interest paid, ignore. Some question will say interest is not related to long term fund. Question will specifically say interest is paid and it's not related to long term funds. Long term funds means it's not related to equity, debt, and preference. It could be some other funds. It could be some other fund. That will come in cost sheet after you write your selling and distribution overhead. After you write your selling and distribution overhead, it will come as a separate line item in the cost sheet if it is not related to equity fund or long term fund. Otherwise, whatever you pay to the providers of capital, be it equity dividend, be it preference dividend, be it interest, all are ignored. Packing, I've already discussed. Primary packing preserves quality. Secondary packing, distribution of product. Primary packing is separate line item. Secondary packing is selling and distribution. Freight inward, raw material, incidental expense. Freight outward, FG. Freight outward is for FG. That will go under the category of selling and distribution. That will go under the category of selling and distribution. Income tax. Costing is only bother about calculating the cost of a product or service. Profit is itself is not the priority to do the calculation. So in the calculation, I get profit. After profit, what happens? I'm not bothered. You may pay interest out of the profit. You may pay equity dividend. You may preference dividend. You may pay income tax. All that is not my worry. Income tax is also ignored. Income tax is also ignored in the calculation. I'm not bothered whether you're paying tax, not paying tax, whether you're making profit, not making profit. Objective is to calculate the cost. Objective is to calculate the cost. So I will calculate the cost. After that, what happens is not my worry. Clear? Any doubts in this? These or there are different MCQs. These are very good MCQs to test your clarity. You can see it later. Now I come to the most important segment where Unfortunately, a lot of mistakes are made by student. Valuation of closing stock. Now, closing stock can be valued using two approaches. One is called FIFO, second is called your under FIFO method. Assumption is entire opening stock is fully sold and whatever closing stock I have is coming only from this year production. Whatever closing stock I have is coming from the current year production. That shelf life example which we saw, where I said I'll sell the entire 20,000 first and then only I'll sell the balance unit. So FIFO method assumes that entire opening stock is fully sold. So FIFO is very simple. Cost of production divided by units produced into closing cost of production divided by units produced into closing stock. FIFO method closing stock does not include any units from the opening stock. Entire closing stock is from current year production. Weighted average says COP production add opening stock value, add opening stock units, opening stock value, add opening stock units, and then again multiply with closing stock units, multiply with the closing stock units. So under weighted average cost method, I also consider opening stock value for inventory calculation. I also consider opening stock value for inventory calculation. Under FIFO method, we do not consider cost of production 40 lakh, units produced 10,000, units produced 10,000, opening stock 5 lakh, number of units of opening stock is 1000. What is the value under FIFO method? Very simple, 40 lakh by 10,000, 40 lakh by 10,000 into 5,000, 40 lakh by 10,000 into 5,000 is FIFO method. Cost of production by units produced, cost of production by units produced, and multiply with the closing stock unit, multiply with the closing stock units. When it comes to your weighted average, 40, add this 5 lakh, add this 5 lakh, in the denominator 10, add the 1000, add the 1000 and multiply with 5,000. So FIFO method 40 by 10, 20 lakh, 40 plus 5, 10 plus 1, 40 plus 5 and 10 plus 1, and you get answer of 20 lakh 45 454. Any doubts on this? So under FIFO method, again I'm repeating, and many times question will not have clarity. You have to write your assumption, which method you are following, FIFO method or weighted average cost method. I've seen many students not writing assumption, and that will lead to loss of marks. Please write your assumption. Are you following FIFO method or are you following weighted average cost method? That's your wish, whichever method you want to follow, but you have to write a note. You have to write a note. If you're not writing a note, marks may get deducted for that. Clear? Any doubts in this? So I have a FIFO method and I also have a weighted average. FIFO method, cost of production by units produced into the closing stock, and this is cost of production plus the opening stock units divided by units produced plus the opening stock sorry, opening stock value there and opening stock units here into the closing stock units. Clear? Any doubts in this? Okay, let's be very clear on this term, scrap of material versus scrap arising out of manufacturing process. In the 5 line items which I said, I had primary packing, all that. There was one item called credit for recoveries or scrap. ICI may use the word sale of scrap, no problem, please deduct it in that 5 line item. Sale of scrap arising out of manufacturing process, deduct there, no problem. Scrap of process product, deduct there, no problem. Some exam they may say scrap of material slash scrap of raw material. This came in one exam and student made a mistake. If they use the word scrap of material or scrap of raw material, it means raw material is not processed itself and you should subtract it from the raw material cost. You should subtract it from the raw material cost and not subtract it in those five line item. What is the impact? If you subtract there, prime cost will go down, gross works cost will go down, net works cost will go down. So automatically some changes in cost structure may happen. So it is very critical if they use the word scrap of material or scrap of raw material. If they use the word sale of scrap, scrap arising out of manufacturing process, scrap of process production, scrap of defective material, scrap in the production process, all that is okay. But scrap of material or scrap of raw material, scrap of material or scrap of raw material, you'll have to deduct it from material cost. You'll have to deduct it from material cost. GST. GST, as you would have learned in your indirect tax, there's something called as an input tax credit for the GST. If input tax credit is available, GST is not my expense. If it's not available, it is part of my expense. You can pay GST on purchase, no credit, part of direct material. You may also pay GST on some other item. For example, for your office, you have taken a rent. On the rent, you are paying GST. If rent is administration overhead, GST on that is also administration overhead. GST on that is also administration overhead. If credit is available, it is not an expense. So GST would be paid on purchase of material. If ITC is available for GST paid, then the same is not an expenditure. If ITC is not available, if ITC is not available, GST paid will be considered as incidental expense in direct material. If you pay it on overhead or labor, then please treat it as part of that category. This I've already explained. Variable versus fixed, direct material, direct labor, direct expense, selling and distribution overhead are variable cost, whereas your general and administration is fixed. Factory overhead may be assumption. Why this is critical? Can you give me answer to this? Do your calculation. Let's see how many of you are getting this. Factory overhead 40% fixed. Let's see how many of you get this. What will be the revised factory overhead? How much is the fixed factory overhead in this? 4 lakh, add 10%. How much is variable factory overhead? But that's an irrelevant number for me. 6 lakh, I assume last year 100 units. I assume last year 100 units. If I assume 100 units last year, 6 lakh divided by 100 is 6,000 per unit. 6,000 per unit. I will apply this 15%. I'll apply that 15%. So last year 6,000 plus 15%, and this year units are 160. This year units are 160 because there is a 60% increase in volume. There is a 60% increase in volume. Many students apply it on directly 6 lakh. That is wrong. If you apply directly on 6 lakh, it is wrong. So what I do, I assume 100 units. Any number you can assume. Any number you can assume. So 6 lakh divided by 100 is 6,000. Add 15%. Any change in variable cost means a change in variable cost per unit. Last session also spent a lot of time there. Today also we did one question where we were little bit struggled, and same is this. This is a continuous issue. It's not only with you. I've seen this issue with most of the students because they find it little difficult to exactly factor this. So see here, 4 lakh 40, 6,000 per unit, 6,900, 11 lakh 4, and put together 15 lakh 44. Put together it is 15 lakh 44. Always be very clear. Any change in variable cost means a change in variable cost per unit, and any change in fixed cost means a change in total fixed cost. Be very, very clear on that. Unless there is a clarity on this, you will keep struggling in exam. Clear? Okay, there's one more area where I've seen students struggling a little bit. Profit margin they'll give. Sometimes they'll say it is on sales. Sometimes they'll say it is on cost. Doesn't really matter. It's very simple for us. Let's take an example. Cost is 8 lakh, profit is 40%, compute sales. Listen, cost, profit, sales. Profit is 40% on sales. If it is 40% on sales, sales is 100. Profit is 40. Cost is 60. Cost is 60. If they say it is on sales, sales is 100. If they it is on sales, sales is 100. If they say it is on cost, cost is 100. If they say it is on cost, cost is 100. In this example, 60 is equal to 8 lakh. What is 40? What is 100? You'll have to do cross multiplication. 60 is equal to 8 lakh. What is 40? What is 100? You will get the 13 lakh 33,000 number. Next is again I'll write cost, profit, sales. Sales is 10 lakh. Profit is what? 24% on cost. So cost is 100, profit is 24, sales is 124. Sales is 124. 124 is equal to 10 lakh. 124 is equal to 10 lakh. You will do the reverse calculation and then get to the number. Again, I'm repeating, if the profit margin is on sales, sales is 100, profit is 20, cost is balance 80. If it is on cost, cost is 100, profit is 20, 120. Can you get me answer to this quickly? Cost of sales 80, profit is 15% on sales. 15% on sales, what is the sales number? Right, cost, profit, sales. Hundred and 180. Sales number or profit number? I think you're saying these profit number. So sales will be added with that. 94,118. 94,118. Very simple kind of MCQs. If see, the point is when you solve this, your focus is only on this adjustment. When you do it as a part of a bigger question, you focus on so many adjustments, somewhere you get confused. So we have full clarity on this. And the last item is, these are certain ambiguous items in classification. I have copy pasted whatever ICI has done in most of the question. First item, royalty paid for production. Royalty, ICI mostly takes it as direct expense. So if you see in a question royalty, you will take it as direct expense. This is the most important part for you to revise. This revises most of my cost sheet sums in classification. Power and fuel, ICI takes it as direct expense. I have seen question where it has taken as factory overhead also. Most of the question takes it as direct expense. Molds and pattern. What is molds and pattern is, in order to manufacture a product, you need a design. That design is called mold. That is treated as direct expense. Job charges paid to job workers, direct expense. What is job work? You would have learned in indirect tax. So that is treated as direct expense. So I have variety of items here. Raw material, you can keep reading this. I'll wait for 1 minute. You keep reading this. Any item you need explanation, let me know there. Direct expense versus production overhead is always a question mark. Clear? Anyway, when I do questions, you will see these items. Classification. See, today I will say power and fuel direct expense. Tomorrow you ask me a doubt, I may say factory overhead, because it is an ambiguous item. It's an ambiguous item. It can go at either of the places. Admin overhead, there are two types. One is called admin overhead relating to production. Second is called general and administration overhead. So if it's given in rupees in the question, we treat it as general and administration overhead. Most of the times we treat it as general and administration overhead, but there is one time where they will say admin overhead is a percentage. Admin overhead is a percentage of an item like gross works cost. That time alone you may treat it as admin overhead relating to production. If it's a percentage of factory cost, if it's a percentage of factory cost, it's an assumption. You want to take other assumption also, it's fine. Assumption is assumption, I cannot question your assumption. But normally if it's a percentage of factory cost, ICI takes it as admin overhead relating to production. Otherwise you take it as general and administration overhead and then proceed it. Last concept is any abnormal item like fine, penalty, demurrage, abnormal cost, everything is ignored in costing. Everything is ignored in costing. And if you are getting any subsidy, grant, or incentive, you can reduce it from the cost. So if your subsidy is related to material cost, reduce it from the material cost. If it's related to labor cost, reduce it from the labor cost. Wherever the subsidy, if you're getting some electricity subsidy, reduce it from the electricity cost. So you can reduce that from whatever cost object it pertains. Clear? Any doubts on this? With this, my concepts are over. I'll obviously have to do few questions to get you the clarity, but the concept part is over. Any doubts on any of the item? First, we classify them as direct, indirect. You'll, in your mind, you'll have to decide whether it's a direct or indirect. Direct means nature of cost. Can you touch it? Is it reward to the worker or residuary category? Indirect means where is the cost incurred? Factory, showroom, everything else is your administration overhead. Clear? Any doubts on this? And inventory valuation. There is a one method called as your FIFO method, second method called as your weighted average. FIFO method, cost of production by units produced. Here, cost of production plus the value of opening stock, units produced plus the opening stock units. Clear? Any doubts in this? Okay, let's do few questions on cost sheet. Following information relate to a manufacturing concern for the year ended 31st March 2019. Raw material opening. Raw material opening. Where will this come in the cost sheet? Direct material. That participation I want as of now. Direct material. Raw material closing. Direct material. Purchase of raw material. Freight inwards. Direct wages paid. Direct labor outstanding at the end of the year. This is your final accounts adjustment. You will have to add this. You will have to add this. Factory overheads is 20% of prime cost. 20% of prime cost. Work in progress opening, separate line item. I have called add opening WIP. Work in progress closing, I have a separate line item. Admin overheads relating to production. Crystal clear, they have mentioned it is relating to production. Distribution expense. Distribution expense is a separate line item. They have said per unit. Per unit, normally distribution will be for per unit sold, only for the units sold. Finished goods opening is given. Sale of, what is the word used here? Scrap of material. Where will scrap of material go? In the direct material. Some students took it in the 5 line item. What happened? Because of that, he got wrong prime cost. Wrong prime cost led to wrong factory overhead. Wrong prime cost led to wrong factory overhead. Otherwise, classification change will not change the cost. Because if prime cost goes down, some other cost will go up and in the end it will match. But here there is a problem. Factory overhead is a percentage of prime cost. So if you write wrong prime cost, you will write wrong factory overhead, and after that the entire solution will go wrong. Firm produced 14,000 units. Stock at the end of the year is valued at, they have just used the word cost of production. Under cost of production means only at cost of production means it's FIFO method. Only at cost of production is FIFO method. Cost of production plus the opening stock is technically your weighted average cost method. In this question, when you solve, you'll understand both method will give the same answer. When you solve, you'll understand why both are giving Same answer. We'll see that later. Firm sold 14,153. Prepare the cost sheet of the firm. Straightforward, simple question. No major adjustment. Let's start doing it. Cost sheet. You'll do it along with me. Particulars and two amount columns. There's an inner column to write the sub items and an outer column to write the final number. Particulars, amount, direct material. Underline that. Direct material. Whatever item I'm writing, I'm putting a tick mark for that. First, I'll write this. Opening stock of raw material. Opening stock of raw material. 2,28,000. Opening stock of raw material. 2,28,000. Purchase of raw material. Opening 228. Then I write purchases 4225. Purchases 4225. What else will come in direct material? Less closing. Okay. Less closing stock of raw material. How much? It is 3,05,000. What else will come? Freight inwards. Freight inwards is 1 lakh. Freight inwards is 1 lakh. Less sale of scrap of material. Sale of scrap of material, which is 8,000 minus 8,000. Scrap of material is minus 8,000. If you don't subtract it here and subtract it later, prime cost will go down. Prime cost will go down. One amount in the outer column. 42 lakh 40,000. Clear? Then direct labor in bracket 1256 plus 150. 1256 is paid and 150 is outstanding. 1 lakh 50 is outstanding. 1256 plus 1 lakh 50. 14 lakh 6,000. In this question, I do not have any direct expense. So if you want, write direct expense. If you don't want, don't write it also, doesn't really matter. I'm writing prime cost. 56 lakh 46,000. 56 lakh 46,000 is the prime cost. We do not have any item of direct expense in this question. No ambiguous item also. Assumption headache is not there. Then factory overhead 20% of 5646. 20% of 5646. Gross works cost. Gross works cost 67, 75, 200. First question, I am telling you to write along with me. Balance question, as I did in cost activity based costing, you may not be solving much because focus is understanding the concept once, and thereafter, if needed, I'll tell you few items. After this, I have add opening WIP, less closing WIP, net works cost. Opening WIP is 192 500, 140 700. Add opening less closing. Then I have those 5 line items. In the 5 line items, I have only one item, which is admin overhead relating to production. I'm not writing the other items. At home, when you do it once, you write the full format once before solving, and then thereafter, whichever question you are solving, just whatever is there. So, admin overhead relating to production. Admin overhead relating to production, 1,73,000. Cost of production. Add opening FG less closing FG, cost of goods sold. Cost of production, add opening less closing, cost of goods sold. Whenever we are writing this, I'll have to write units in bracket. That ensures that I don't make mistake. For example, opening right in bracket 1217. This is given in the question. 1217 units. Produced 14,000 units. Produced 14,000 units and sold 14,153 units. Can you tell me balancing figure, closing stock, how many units? Production plus opening minus closing is 14,153. 1,000. This is my closing stock units. Some question, production will be there, closing stock will be there, opening will be there, sales is balancing figure. Some question, opening stock is balancing figure. Some question, closing stock is balancing figure. The units part, the units part. So it's always better if you have units, write that in the bracket. Opening stock value is 608 500. 608 500. Now listen, in this question, if I divide this by 14,000, I get 500. And if I divide this by 1217, I get 500. So whether you follow FIFO method, weighted average cost method, everything is 500 per unit only. Everything is 500 per unit. That's why I said under this question, whether FIFO or weighted average will not make any difference. FIFO means 70 lakh divided by 14,000. Weighted average means 70 lakh plus 6 lakh 8,500 divided by 14,000 plus 1217. It will be again 500 only. It will be again 500 per unit. Whether you follow FIFO method or weighted average cost method, both in this question is 500 only because my opening stock is 500. Current year production is also 500. Closing stock is 1064 into 500. 1064 into 500 or technically 70 lakh divided by 14,000 into 1064. Or you add your opening FG there in the numerator and denominator, same 500 you're going to get. Indirectly, everything is going to be 500 per unit. Indirectly, opening stock is 500, closing stock is 500, COGS is 500, and COP is 500. Everything is going to be 500 per unit. Clear? I think we have considered almost everything except for distribution expense. Distribution expenses 16 per unit sold is our assumption. Distribution is normally for units sold. So selling and distribution 18 into 14,153. See, it could be possible that I've done distribution means I have sent it to my warehouse. It is possible that I've sent all units to my warehouse, then I may incur on everything. But normally distribution is on units sold. Or sorry, 16. Okay, sorry, 16. cost of sales, profit, and sales. Sales is, I think, 618 into 14,153. These are typical 10 mark question in exam. Rarely they may ask it for 5 marks. But normally, so now it will be 7 mark question. Sorry. Now it will be a 7 or a 8 mark question because 14 marks is your every question. So they may ask it for 7 or 8 marks. Earlier it used to be a 10 mark question. Profit is balancing figure. Some question they may say profit is 20% on cost, 10% on sales, like what we saw earlier. It can even come in that form also. Clear? I first wanted you to understand the format, which we have done it in this question. Any doubts on the format of a cost sheet? Because that's the most important part. Any doubts on the format part or how we do ambiguous classification? Nothing much can be done because ambiguous will keep coming. There, I may take an assumption and proceed ahead. Any doubts first on this? Clear? I'll see now balance questions more for practice with certain adjustments here and there. Some extra adjustments will be there. Let's come to question 2. A fire occurred in the factory premises on 31st October. Accounting records have been destroyed. Certain accounting records were kept in another building. They reveal the following for the period of 1st September to 31st October. This is a reverse working question. Okay, I think we will do it together. Direct material purchase is given, opening WIP given, opening RM given, opening FG given, indirect manufacturing cost. Technically, indirect manufacturing cost is factory overhead, which is 40% of direct labor, sales revenue, direct labor, prime cost is given, gross margin on revenue will give me COGS. And goods available for sale is either opening stock plus COP or closing stock plus COGS. The loss is covered by insurance company. The insurance company wants to know the historical cost of inventory for a settlement and all. They have asked us to calculate what is closing FG, what is closing WIP, what is closing raw material. These three we have to identify. Almost the similar format we are going to use. Some items may not come in that. Let's start doing it. Cost sheet. Particulars amount. Let's write the whatever data we have. Opening stock of raw material 20,000. Opening stock of raw material 20,000. Very limited information is there, but still it's a reverse working question. You may end up struggling in reverse working. You'll understand the challenge when I do it. Opening stock of raw material 20,000. Purchases. Purchase of raw material 2,50,000 less. This we have to identify. This is a question mark. Less closing stock of raw material. We'll see how to identify that. But first, let's write everything so that we'll be able to come back to the missing item. Is there anything else in direct material? Any incidental expense? Anything given? If nothing is there, then we leave it. I leave a line direct labor. Direct labor. How much is direct labor? 222, 250, 2,22,250. Direct expense not there. ठीक है, I'm writing it but it's not there. I get prime cost. I cannot put a total but it's given in the question. Prime cost is given in the question. How much is prime cost? 397 750. Please reverse work and tell me what is this question mark. 397 750. Tell me the question mark. Outer column question mark and then the inner column question mark. Outer column is 175 500. Outer column is 175 500. Negative 94 500. See, whenever you do reverse working, after you're done with the reverse working, please put normal calculation in the calculator and check. Many a times, student instead of adding a number, they'll subtract it. Instead of subtracting a number, they'll add it. So once you are done, write minus 94 500 and then check in the calculator. 20 plus 250 minus 94 500. Are you getting that 175 500 or not? If you get it, okay. If you don't get it, means you have done a mistake in the calculation. Reverse working, be a little cautious. Any doubts on this? Then I go to factory overhead. 222 250 into 40%. 40% of direct labor. 40% of direct labor. I think almost all data we have copied. I get gross works cost. Gross works cost. Add opening WIP less closing WIP net works cost. Listen, this is also called factory cost, also called cost of production in this question. I don't have those 5 line item. I don't have those 5 line item. Quality control, primary packing, none of them are there in this question. So I call it as cost of production. In that opening WIP is given. Opening WIP is 40,000. This is question mark. This is also question mark. We'll see. Opening WIP is 40,000. Closing WIP is not given. COP is also not given. Then I have add opening FG less closing FG COGS. Beyond this, I'm not writing. If I want, I'll write it. But I don't see a need beyond this. Objective is to find only opening FG and closing FG. If needed, we will write it. In this, the opening FG is 37 750. This is the stage at which we are in, and I need to use this information, this information, and this information. These three information I need to use it. Once I use this three information, somehow I'll get the balanced data. Tell me what can I calculate now? Cost of goods sold is 70% of sales. Cost of goods sold is 70% of sales because 30% is the GP margin. 30% is the GP margin. So COGS is 7 lakh 50 into 70%. Still, I have three question marks. What else can we do? Reverse is not possible as of now. How else should I proceed now? Correct. Okay, somewhere this is the formula I'm going to use. Cost of goods available for sale is equal to closing stock plus COGS. Closing stock plus COGS or opening stock plus production, whichever way you do, you will complete the question now. Closing stock plus COGS or opening stock plus COP. If you do opening stock plus COP, you will get the COP number. You will get the COP number, and if you do closing stock plus COGS, you will get the closing stock number. So this is 555 775 is equal to closing stock plus 525. Closing stock plus 525. Or you can even do opening stock plus production. You will get the cost of production figure. You will get the cost of production. What is the closing stock you get? 30,000 negative 3775. Tell me the production number now. COP. You'll have to do in the reverse calculation. So what is subtracted will get added, and what is added will get subtracted. This I subtract this 5 lakh 1825, and then always do a forward calculation to check 518 plus 37 minus 30, are you getting the number? Always do a forward calculation later. And this is balancing figure 8,000, and forward calculation is checking it. Reverse working, be always cautious, because forward calculation is may take extra 5 seconds, but it's worth, because you will make a mistake otherwise. Reverse calculation has that problem. Any doubts on this? Clear? So here we have used the understanding of COGS, and that is GP margin and cost of goods available for sale. These two items we have used it in this question. Okay, another reverse working question came in exam. You're not going to do, I'm going to do this. Let's first discuss it. XYZ, a manufacturing firm, has revealed the following information for September 2019. Opening raw material, where will it go? You'll have to participate. Opening raw material, direct material. Closing raw material, direct material. Opening WIP, separate line item. Closing WIP, separate line item. Firm incurred following expenses for targeted production of 1 lakh units. Consumable stores and spares of factory. The term consumables mean indirect material. What is consumables is, when I use a machinery, for using the machinery, I may incur some oil expenses, some chemical expenses. Those expenses are called indirect material. They are consumed while using the machinery. They are consumed while using the machinery. This is an indirect material. It will be treated as what? Factory overhead. Research and development cost. In those 5 line items, I have a separate line item called R&D cost. Quality control cost. Packing cost. This will go under which category? Selling and distribution overhead. Selling and distribution, and very clear, it is on what? Units sold. Lease rent of production asset. I think it is factory overhead, but if I go back to my classification, I think ICI did direct material. I would have written it here. Okay, factory overhead. Lease rent of production asset is factory overhead. I was thinking it could be direct expense. But they have taken factory overhead. This, all these items from those questions, I've picked it here and written it. So lease rent of production asset will go under the category of factory overhead. Administration expense in bracket what? General. So general and administrative overhead. Selling and distribution expense. Finished goods opening not there. If opening is not there, FIFO weighted average headache is not there. FIFO weighted average headache is not there, because under weighted average you have to add opening stock. That itself is not there. So both are same only, whether you call it as FIFO method or call it as weighted average cost method. Closing, I have 5,000 units. Closing, I have 5,000 units. Defective output, which is what? So defective units is, which means production is only 96,000. Production is only 96,000. This 4,000 into 61 will go where? I have a separate line item called credit for recoveries or scrap. I have a separate line item called credit for recoveries or scrap. Closing stock is valued at COP excluding admin. This line is not even needed because admin is anyway not part of the COP in this because it's general and administrative overhead. Cost of goods sold. Again, they're saying excluding admin. I don't know why they are giving because admin is anyway going below only for us. If admin was above, then I have to add it back and write the amount. Excluding admin is what? 7826. Direct employee cost is half of the material consumed. Selling price is 110. First is calculate the value of material purchased and prepare the cost sheet. So what is missing is material purchased. I'll explain now again. First, I'll write this 242 in direct material. I'll write this 242 in direct material. This 292, I'll subtract it. Purchases balancing figure. Purchases balancing figure. How do we get it? We'll see later. Purchases balancing figure. Then direct employee cost is half of the material consumed. I don't even know the material consumed. I don't even know the material consumed. This is a very tricky question. I don't know the material consumed. So how will we come to that? We'll see in some time. Direct expense, I don't see anything. So prime cost, last question we did, prime cost was available. This question, prime cost is not available. How do we get to it? As we proceed, the discussion will follow. Then I have my factory overhead. In our factory overhead, consumable stores and spares of the factory, lease rent of production asset, lease rent of production asset. I'll be writing that number 3 lakh 50 and 2 lakh. Total again, I don't know because I don't know the prime cost. I don't know the gross works cost. I don't know the prime cost. I don't know the gross works cost. I know add opening WIP. I know less closing WIP. I get net works cost. After that, I'll write R&D expense, quality control expense, and credit for recoveries or scrap. Credit for recoveries or scrap. I'll be getting something called as cost of production, which also I don't know, which also I don't know because I have no idea what is cost of production. But the only thing is production is for opening stock 0, closing stock is for 5,000, COGS is for 91,000 is 78 lakh 26. 91,000 is 78 lakh 26. What is 5,000? What is 96? You will get COP. Listen, using COP, reverse working will give you net works cost. Reverse working will give you gross works cost. Reverse working will give you prime cost. Reverse working will give you prime cost. So see the calculation here. I have my 7826. This is for 91,000. This is for 5,000. This is for 96. If 91 is 78 lakh 26,000 divided by 91,000 is how much? 86. So 5,000 into 86 and 96,000 into 86, and you keep going forward and you will come to this number called. At this stage also we will get stuck. Prime cost is 78 lakh. What question has said is direct material, I don't know. Direct labor is half of direct material. Direct labor is half of raw material consumed. So we will say DM plus another half DM. DM plus another half DM is equal to 78 lakh. DM plus another half DM is equal to 78 lakh. DM is 52 lakh. Labor is 26, and this becomes balancing figure. This becomes balancing figure. Beyond that is fairly simple. Beyond that is fairly simple. So in this question, I don't even get to last question. Prime cost was very simple. Prime cost is not there. Gross works cost is not there. Net works cost is not there. COP is not there. COGS, and from there we have reverse work. COGS, from there we have reverse work. Good part is there is no opening stock. If there is no opening stock, COP same 86 per unit, closing stock same 86 per unit, and COGS also same 86. Last question opening stock was there, but everything was 500. Everything was 500. Otherwise, COGS per unit and COP per unit may or may not match. Clear? Any doubts on this? Any doubts on the question? This adjustment which you are seeing, I have discussed so much in depth, but This is one part. A firm has a targeted production of 1 lakh, defective production is 4%, closing stock is 5,000, there is no opening stock. How much is the unit sold? So, this is what I have used in that question to get to that 91,000. Then we divided and then we went ahead in the reverse working manner. And also this part, direct expense 2 lakh, prime cost is 95. In reverse working, you get the number. Direct labor is half of raw material consumed. Direct labor is half of raw material consumed. If you solve this properly, you kind of understand the adjustment. So this is what MCQ will do. It will help you in analyzing all the adjustments at one place. All the adjustments, you can analyze it at single place. Clear? Any doubts on this? Okay, I'll take a 15 minutes break and then do the balance question. 15 minutes break, let's take it. Okay, let's proceed. I'll come to question 4. Let's understand this. Following are extracted from the books of Neela and Co. for a year. Output 1000 units, raw material 20 lakh, wages 12 lakh, factory overhead 8 lakh, office overheads 4 lakh, selling overhead 1 lakh, rate of profit 25% on sales. Very simple kind of an information. The manufacturer decided to produce 1500 units for the next year. So 1000 is becoming 1500. This is where the important part. Material cost will increase by 20%. Any change in material cost will indicate change in what? Material cost per unit. Material cost per unit. You cannot directly say, I will add this 20% to 20 lakh. First, you have to do 20 lakh, divide by 1000 units, and then get that number, add 20%, and then multiply with 1500. Multiply with 1500. Labor cost will go up by 10%. Factory overhead 50% fixed, 50% variable. Otherwise, I would have taken an assumption. They have clearly mentioned direct material, nothing is mentioned, variable. Direct labor, nothing is mentioned, variable. Factory overhead, they have mentioned 50% fixed, 50% variable. Admin overhead, nothing is mentioned, it is going to be fixed. And selling expenses per unit will be reduced by 20. They themselves have mentioned what will go down is per unit. What will go down is per unit. Indirectly, it is variable. Rate of profit will remain same. That is, the profit margin will continue to be 25% on sales. Will continue to be 25% on sales. We are required to prepare a cost sheet. Let's do particulars. Previous year calculation amount. Next year calculation amount. Particulars, previous year calculation and amount. Next year, do it along with me. Next year calculation amount. This will test your full understanding on changes in variable cost and changes in fixed cost. First is direct material. Last year 20 lakh. Last year is 20 lakh. They have not given any breakup, but what I am going to say is that is this 1000 units into 2000 rupees. 1000 units into 2000 rupees. This breakup I am writing voluntarily. 1000 units into 2000 rupees. 20 lakh breakup is 1000 units into 2000. Now the question says material cost will increase by 20%. So first increase the 2000. Increase the 2000 by 20%. Any change in variable cost means a change in variable cost per unit. So 2000 will go up by 20%. How much it is? And units is 1500. So 1500 into 2400. 1500 into 2400. 36. If you are directly done 20% on 20 lakh, you would have got only 24 lakh. You would have got only 24 lakh, but we are getting now 36 lakh. If the same question says direct material is a fixed cost, which may not happen, but if it says 20 lakh plus 20%, 20 lakh plus 20%. Next, direct labor 12 lakh. I break it as 1000 units into 1200. 1000 units into 1200. There is an increase of 10%. Labor cost will go up by 10%, which means 1200. 1200 will go up to 1320. Any change in variable cost means a change in variable cost per unit. So now this will become 1500, 1320. Total is called prime cost. 32 lakh and 55 lakh 80. 32 lakhs and 55 80. Then I have my factory overhead where I'll write two items: variable factory overhead, fixed factory overhead. We have two types of overheads: variable and fixed. Now listen, the factory overhead given is 8 lakh. So variable is 4 lakh, fixed is 4 lakh. No breakup, no need to write this, but I'm not going to write any breakup for this. Fixed factory overhead, I don't want to write how many units, what is per unit. I don't want to do any of that because fixed doesn't really matter. Variable, I'll write the breakup. Variable, I'll write 1000 units into whatever I get as balancing figure. 4 lakh is the variable component, fixed component is 4 lakh. Fixed, no need to write any breakup. Variable is 1000 units into 1000 into 400. Now, question has not mentioned any change. They have not mentioned any increase, decrease. So this side 1500 into 400, and this 4 lakh is copy pasted. 1500 into 400 and 4 lakh is copy pasted. We get 6 lakh and 4 lakh. 6 lakh and 4 lakh. Fixed factory overhead as such copy pasted. Variable factory overhead, I have done the breakup. No change is there. No change is there, but I have to multiply with more units. I have to multiply with more units. I get now 40 lakh, 65 lakh. This is called GWC, NWC, COP, COGS. Everything is same because there's no opening WIP, no closing WIP. 5 line items are not there. No opening FG, no closing FG. So gross works cost, otherwise called as net works cost, otherwise called as cost of production, otherwise called as cost of goods sold. Everything is same. Everything is same. After this, we have admin overhead. Admin overhead is given in the question is 4 lakh, and I copy paste the same 4 lakh. No breakup and all. I don't write any split because admin is fixed. Admin is fixed. I don't try to write any breakup of the admin overhead. Wherever it is variable, I focused on. So in this question, they said 1000 units. If the question does not say any units, 100 units for the last year, this year 100 plus whatever increase they give, whatever increase they give. Many times they will not give the units, doesn't really matter. Take 100 and then proceed ahead, and whatever change. Selling overhead, last year is 1 lakh, 1000 into 100, and it will go down by 20%. Selling expense per unit will go down by 20% is what the question has said. 1000 into 100, 1000 into 100, and this is 1500. Total is COS 45, 45 and 71. Clear? And then I have my profit margin. Profit sales. Sales is 100. Profit is 25. Cost is 75. Because the margin is given on sales. Margin is given on sales. So sales is 100. Profit is 25. Cost is 75. 23 lakh 66,667 and sales is 94 lakh 66,000. The same question, they may not give the number of units. If they don't give, assume as 100 and then proceed ahead. Any doubts on this? This test your understanding of changes in variable cost, changes in fixed cost. Be very, very clear. I've been talking about this multiple times because even in the other chapters also, this will keep coming back and we do make mistakes there. Any doubts on this? Done. Any change in variable cost will be taken as change in variable cost per unit. In this question, material, labor, variable factory overhead, and selling overhead are variable in nature. We should compute cost per unit of last year, apply given change, and then multiply with current year units. Any change in fixed cost will be changes in total fixed cost. In this question, fixed factory overhead, general and administration are fixed. We should take the total cost of last year and apply any change. Units produced does not matter. Units produced does not matter while calculating what fixed cost of current year. And these are the rule. Assume to be variable, 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 need to be assumed, assume to be fixed, assume to be variable. This is rule if problem is silent. If problem is silent. Question number 5 is a very comprehensive question. We are not going to do cost sheet because if I do cost sheet, even in my regular class, it has taken me around 45 minutes. What we are going to do is we are going to just discuss the classification. Where should this item go? There is nothing else beyond that in this question. There is no calculations extra. You just need to keep classifying it properly and then put a total. Raw material purchased, where will it go? Participation, direct material. GST paid on the above purchase, eligible for input credit. Not considered. Freight inward, direct material. Wages paid to factory workers, direct labor. If it's assumed to be direct worker, that's my assumption. That's my assumption. Contribution for employees, PF and ESI. Okay, if it is for the same worker who are there above, it will go to direct labor. If it is for indirect worker, it will go to factory overhead. So I assume it's part of the same expense, and bonus is also same. So all these three will go to direct wages. All these three will go to direct wages, assuming it is for the direct worker. Assuming it is for the direct worker. Royalty paid for production. Participate. Direct expense. I think this is one of those items which was there. So royalty paid for production, direct expense. Direct expense. You can just revise this ambiguous item day before the exam so that in case that comes, you can end up classifying. Then amount paid for power and fuel. Direct expense alternatively can be taken as factory overhead. Amount paid for molds and pattern, direct expense, but it says life is equivalent to 2 years. So half of this only you'll have to take. Half of this. Sometimes you may do the statement for half year. Then you have to take into 6 by 24. Into 6 by 24. You can even do it for a month into 1 by 24. Cost sheet is not only for a year, it can be for any period. Job charges paid to job workers, direct expense. Stores and spares consumed, factory overhead. Depreciation on factory building, factory overhead. Office building, general and administrative overhead. Plant and machinery, plant and machinery is normally at the factory, so it will go to the factory overhead. Delivery vehicles, Selling and distribution overhead. Selling and distribution overhead. Salary paid to supervisor. Have no idea who is the supervisor. Is he a factory supervisor or an admin supervisor or a sales supervisor? Normally, we assume it as factory supervisor and take it to factory overhead. Take it to factory overhead, or you can also take it as admin overhead relating to production. We don't know what, that's your assumption. This is your assumption. We'll see in the end what is the answer. Repairs and maintenance for plant and machinery, factory overhead. Sales office building, selling and distribution overhead. Sales officer, selling and distribution. Vehicles used by director, general and administrative overhead, because director sit out of the admin office. Insurance premium for plant and machinery, factory building, stock of raw material and WIP. Again, it is factory overhead. Stock in transit is incidental expense. Stock in transit is incidental expense. This is stock of raw material. It is in the factory. It is in the factory. Quality control check activities. I have a separate line item called quality control. Quality control staff will go there. R&D, I have a separate line item. Pollution control and engineering. There's no separate line item called pollution control. I have quality control only. I don't have pollution control as a separate line item. This will go to factory. Where is the cost income? Pollution control will be done where? Mostly at the factory. Pollution control is going to be done at the factory. Where is the pollution control needed in an administration or a sales office? So pollution control will go to my will go to my factory overheads. Expenses paid for administration of factory work. Crystal clear word. Administration of factory work. So this will go under the category of admin overhead relating to production. Then salary paid to production control manager. Ideally factory overhead, but I think this is that ambiguous item where ICI has taken this to be admin overhead relating to production. Admin overhead relating to production, because this guy is going to administer the entire factory. Administer the administration means, the term administration means taking control of the entire work. So he is going to take control of the factory. Finance and accounts manager, general and administrative overhead. Sales and marketing, general manager. General manager will be your general and administrative overhead. Primary packing, separate line item. Redistribution of finished goods, selling and distribution. Interest and finance charge for usage of non-equity fund. For usage of non-equity. Non-equity means it is going to come as a separate line item after writing selling and distribution. If nothing is mentioned, write your assumption. Is it equity fund or non-equity or non-long term? Non-equity fund, non-long term, any term can be used in the question. Fee paid to auditor, administration, legal advisor, independent director, performance bonus to sales staff, selling and distribution, opening stock, opening raw material, opening WIP, closing raw material, closing WIP, closing FG will go as separate line item. Amount realized by scrap and waste, separate line item. So once you classify them properly, you will be able to get to the answer. This is more of a classification focused question. This, when you do so many items, it will take you easily 20-25 minutes. So many items. ICI frequently asks this type of a question. You see so many times this has come, but they reduce the number of items. This is, I think, for 40-45 items. They'll reduce it to 15-20 items and then ask it in exam. In this, as I said, these are the ambiguous items. GST is eligible for input tax credit. This is not an ambiguous, this is just an explanation. It's assumed that contribution to PF, ESI, production bonus is of direct worker, is of direct worker. That is why I'm taking it as direct wages. Power and fuel can alternatively be classified as factory overhead. ICI has not done it, but I'm saying it can alternatively go as factory overhead. Molds and pattern can alternatively go as factory overhead. Job charges can alternatively go as factory overhead. Salary to production control manager is assumed to be related to factory administration. This can also go as factory overhead. This can also go as factory overhead. Interest and finances for non-equity funds, and hence it will form part of total cost. Clear? Any doubts on this? To revise this, you need not revise the question. You just need to revise this, because this is where the ambiguous items came. And in case you find anything extra ambiguous, write a note and you add those extra ambiguous item. For me, when I was doing my regular class, from multiple questions, I've picked these item. Like industrial exhibition will come in some other question. It's there in the question bank. So some other question, this item was there. So I have picked those items and written it at one place so that you can just revise this, which revises all the question. Any doubts on this? Okay, let's move to question 6. This is a slightly different question. Measures Ariba Private Limited has a normal production capacity of 36,000 units of toys per annum. Estimated cost material 40 per unit, labor 30 per unit, but minimum you have to pay what? So labor can become a fixed cost, can also become a variable cost. Minimum you have to pay what? 48,000 per month. Factory overhead fixed is 360, variable is 10, semi variable is 1 lakh 8,000. If capacity is how much? 50%. If you increase it by 20, so it's like this: 50%, 1 lakh 8,000. 51 to 70, 51 to 70, add extra 46 800. Tell me. 154 800. And if you make it 71 to 90, add another 46 800. 2 lakh, and maybe final is 91 to 100, or sometimes company can even go beyond 100%, but 91 to 100 is another 46 800. 248. See, even if you do extra 1%, you will incur 46 800, because it says 46 800 for every 20% increase in capacity or any part thereof, Administration overhead 5 lakh 18 400 per annum fixed. Selling overheads is 8 per unit. Each unit of raw material yields scrap. Each unit of raw material yields scrap. This will be taken as scrap of raw material. This will be taken as scrap of raw material, which is sold at what? At the rate of 5 per unit. Factory worked at 50% capacity for the first 3 months. It worked at 50% capacity for the first 3 months, and it will work at 80% capacity for the remaining 9 months. First 3 months selling price is 145. They have asked us to prepare a cost sheet showing prime cost, works cost, COP, and COS, and calculate the selling price for the remaining 9 months so that I can get an annual profit of 876 600. So 3 months separate calculation, 9 months separate calculation, and we are going to prepare a cost sheet. I'm going to do it. I don't want you to write it because a lot of calculations will be needed. Now, 36,000 units per annum, which means 3,000 per month, In the first 3 months, you're going to produce 50%. You're going to produce 50%, which is 1,500. And in the next 9 months, every month, you're going to produce 2,400. 80% capacity, 50% capacity. So let's do the calculation. You be in listen mode only. Particulars, 3 months, 9 months total. Production per month. Production per month. Initially, I have 3,000 is the capacity. The initial months, the first 3 months, I'm going to operate at what capacity? 50% capacity. Then I'm going to operate at 80% capacity. So 3,000 into 50% and 3,000 into 80% into 50% and 80%. Total production into 3 months into 9 months. Overall production is 26,100. Now I'll keep writing every cost. The first cost is direct material. Question has said direct material is 40 per unit. I subtract this 5 rupees scrap. I subtract this 5 rupees scrap and make it 35. Make it 35. Somebody can even argue saying that from the raw material scrap is coming by going through the manufacturing process, so show it as separate line item. That argument can also come. I assume ICA would have taken it as subtraction from direct material. In case it's done differently, we'll see. So into 35, again into 35, and I put a total. So this is 35 per unit. Then I have direct labor. Direct labor, the question is saying 30 per unit, but there is one condition. The condition is what? Minimum 48,000 per month. So I do into 30, 1,35,000, or 48,000 into 3, whichever is higher. Whichever is higher, or 48,000 into 3, because I have to pay what? Minimum 48,000 per month. Minimum 48,000 per month. So minimum 48,000 will make it 1,44,000. 1,44,000. You have to minimum pay that. And this side into 30, or I'll obviously pay 6,48,000. I'll pay 6,48,000 because I'm paying more than the minimum. I'm paying more than the minimum. So direct material is done, direct labor is done, direct expense is not there. So I put a total and call it as prime cost. After prime cost, I have factory overhead, fixed, variable, semi-variable. Three items are there. The question said fixed is 3,60,000 per annum. 3,60,000 per annum. So 30,000 into 3 months, 30,000 into 9 months, 3 months and 9 months, 360. Variable is 10 per unit. Variable is 10 per unit. Now comes the semi-variable. Semi-variable, they are saying 108 per annum, extra 46,800, extra 46,800, extra 46,800. First 3 months, what capacity we are operating? 50%. So 1,08,000 into 3 by 12. 1,08,000 into 3 by 12, because there is no extra cost. There is no extra cost. So 1,08,000 into 3 by 12. And for the remaining 9 months, I am at this capacity 71 to 90. I am at 71 to 90. So 201,600 into 9 by 12. 201,600 into 9 by 12, because every 20% I incur extra cost. Every 20% I incur extra cost, and that is for a year. We are doing only 9 months operation. So 201, 151, 200. Clear? Then comes, with this I'll get my gross works cost or cost of production. I'll get the gross works cost or cost of production. Then we have admin overhead and selling overhead. So GWC, cost of production, technically cost of goods sold. Everything is same only. GWC, NWC, COP, COGS. Then I have administrator overhead 518,400. So I assume general and admin overhead 518,400 into 3 by 12, 518,400 into 9 by 12, 3 by 12 and 9 by 12. Selling overhead is 8 per unit. Cost of sales, profit and sales. This is the another important part of the calculation. So assuming you get all these numbers properly, question has asked what should be the selling price so that I make a profit of 876 600. For the first 3 months, selling price is 145. For the first 3 months, selling price is 145. So first 3 months, units into 145. Units into 145. I want overall profit of 876 600. I want overall profit of 876 600, which means overall sale should be 41 lakh 8,500, and this becomes balancing figure. This becomes balancing figure, which means this sales will be sales divided by the number of units will give you the selling price. Sales divided by the number of units will give you the selling price. 3456 divided by 21,600. 3456 divided by 21,600. You get 160 as the selling price. Clear? Any doubts on this? Any doubts on this part? Done. This that semi-variable cost adjustment is very critical. The semi-variable cost adjustment is the most critical part here. Accordingly, you will have to do the calculation. The explanation here is wrong. Okay, this explanation is wrong for semi-variable cost. You may have to solve it like this. This is how the calculation. That explanation went wrong there. 50% 108 numbers are matching, but that explanation is wrong. 51 to 70, 71 to 90, 91 to 100. You get the number and then do into 9 by 12. Into 9 by 12. 7 I'll do it in some time. I want you to attempt question 10. It is a cost sheet with case scenario MCQ. With the case scenario MCQ. So this is the question. If you can open it in the mobile and then start doing it. I'm showing the screen, but you can keep reading it and then start doing it. I'll give you around 8-9 minutes to do this. It is first you'll have to do a cost sheet. When you do cost sheet, you will get answer to this: prime cost, total and per shift cost of production, administration overhead incurred, value of selling and distribution cost and total cost of sales, value of EMS and OMS for the last month. First you attempt it. After you are done, I'll explain few points. And what also happens when you do MCQ, certain tricks I'll tell you. But after you're done, I'll wait for around 7-8 minutes. Please start doing it. Okay, I'll start discussing the question now. I wanted you to have that experience. That is why I told you to do it. It's an MCQ based question. So some parts become a little simpler because classification issues can get sorted out. Let's first look at what are the requirements. First, they've asked for prime cost. So till direct expense, I have to be very clear in my classification because items like power and fuel, if I change the classification, direct expense can change and prime cost can change. So one requirement is prime cost. Assuming I get an answer and my assumption answer is not there, then I have to change the assumption. Total and per shift cost of production for last month. In this case, I will first calculate the total cost. If I get one of the answers here, then I divide by the number of shift. What is number of shift is? Here they have mentioned for a shift of 8 hours. The company conventionally uses performance parameter called earnings per man shift to measure the cost paid to an employee for a shift of 8 hours and output per man shift. During the last year, the company has produced 234,000 units of the output. The company has 1,800 employees working for 26 days. So 26 days is 26 shift. 1,800 into 26 is the number of shift which is possible. Then they've asked for value of administrative cost. Only the administrative cost is asked. Value of selling and distribution cost is asked. Value of EMS and OMS. EMS is earnings per man shift. OMS is output per man shift. Output per man shift. Now coming to the various item, I think one item alone will need a discussion. This will go to direct material. Power consumed, I assume it is direct expense. In case there is a different classification, we will see it. This is also direct expense. Wages and salary is direct labor. Gratuity and leave encashment is direct labor. Hiring charges paid for him is directly used in production. So this is hiring charges for a machinery, which will go to direct expense, because this machinery is used for production. Then hiring charges paid for cars, whatever you are paying for cars will go to administration overhead. Reimbursement of diesel will also go to administration overhead. And on this, there is a GST under reverse charge mechanism. GST under reverse charge mechanism without credit. Without credit, what will be the GST? It will be on this as well as the 66 plus 22,000, 88,000. On that you have to pay GST. On that you have to pay GST, and it will form part of my expenses. It will form part of my expenses. Maintenance cost for weighing bridge. Time of dispatch. Dispatch means selling and distribution overhead. AMC cost at weighing bridge. At the weighing bridge, and for factory premises, weighing bridge will go to selling and distribution overhead. Factory premises will go to your factory overheads. TA or DA, travel allowance or dearness allowance, and hotel paid for sales manager. Sales manager will go to selling and distribution overhead. First is prime cost incurred during the last month. Depending on my assumption on these two, that is wages, diesel, and power, I assume it to be part of direct expense. In case it's different, we'll see. My answer is coming out to be 787.10. In case I don't get the 787.10 in the option, then I may change these to assumption and then see whether my answer is coming, because it's an assumption based area. 7 crore 87 lakh 10,000 is the answer for part 1 of the question. Good part is I can check my assumption here. I can check my assumption. If you take the assumption to the below one, you may not get among the option. Then you'll have to change the assumption and proceed. Total and per shift cost of production. Now, now this question, if you want, you can act little smartly and get the answer. How can I do smartly? Is first I'll calculate the number of shift. After calculating the number of shift, I will see this number divided by number of shift. Is it matching? In case some number is not matching, that is wrong. That answer is wrong. That answer cannot form part of my final answer. For example, my number of shift here is 1800 into 26. Can you tell me what is 1800 into 26? 1000. 787 divided by that 46 number, whatever number you were saying, 787 divided by 46. 16. So this option is not possible. The first option cannot be possible, because 787, if you say, and if you divide by that 46 number, you're not getting 336. You're not getting 336. So this is exclusion. How I am excluding is this answer is not possible, because 787 divided by the number you told, I'm not getting. Can you do 787 10 divided by the number you told? 46 800, whatever number you had said. Point. This is possible. I'm not saying this is the correct answer. This can be possible. This can be a possible correct answer. Whether this is the correct answer, I'm not debating here. Can you divide this by 787.28 divided by the number you told? This is also a possible correct answer. This is also a possible correct answer. Can you divide this? So A and D are not possible. A and D are not possible. In exam, assuming you are in a very tricky situation, you are not able to complete the paper. Only two options are possible. B or C. Think smartly and check one of them and then proceed ahead. If time is a constraint, A and D is not possible. Why A and D is not possible? Because I did 1800 into 26. Whatever answers they gave, I divided and checked. And I'm not getting the answer. Clear? Any doubts on this? Any doubts on this part? This is just something called as exclusion. I'm excluding option A and option D. This exclusion is possible when they give two requirements in the question. When they give two requirements in the question, one of them I can exclude some answers and then try to, in case I'm not able to complete the entire cost sheet, either choose 787.10 or 787.28. One of them you choose and then proceed ahead in exam. Then coming to this, Administration cost, I'll have to do the administration overhead. I don't see major difficulty with administration overhead except for the GST reverse charge mechanism that you have to take care. So if you take care of the GST reverse charge mechanism, you will get 4,400. That part you will have to take care. Otherwise, other things are very simple there. There are no other administration. You don't even need the entire cost sheet to be done. Value of selling and distribution cost and total cost of sales. In case you get your selling and distribution cost, you will remove two options out of the selling and distribution cost. Is very easy, it's either 36 or 56. Get one of the answer. Two choices will get removed. If you are not able to complete the entire cost sheet, out of the two, choose one and proceed. Out of the two, choose one. And wherever question asks for two requirements, this is possible. Output per man shift. How many units are produced? Somewhere in the question said output 2 lakh. Divide by that number of man shift, 1800 into 26. How much? 5. So these two are not possible. One of them you choose. 1504 or 1367. This I am saying in case you are not able to complete the entire. I am just saying in MCQ, whenever more than one thing is asked in a question, there are problems where what ICI will do is they'll say 36, this is 46, this is 56, this is 66. Now don't focus on the second requirement, just focus on the first requirement. Get the first answer, second answer is automatically done because it's 36, 46, 56, 66. If one of them you get the answer, the other one is whatever is the choice along with that. So whenever two requirements are, this is for MCQ, I'm telling you to be little bit smart. Whenever question is asking for two requirements, here the question is worded in such a manner that two options are matching. But many a times what ICI will do is they'll ask profit for the last year and profit for the current year. Last year they are giving option 10, 20, 30, 40. Don't do current year profit. Just calculate the last year profit, whether it's 10, 20, 30, 40. One of them you identify, other one is automatically done. Why to spend time on the other one? So in this case, if they had given me selling overhead like 36, 46, 56, 66, I'll not spend time on cost of sales. I'll not spend time on cost of sales. I'll directly get what? Selling and distribution overhead. This part will be over. I'll directly get administration overhead. This part. What is EMS is earnings per man shift. What is earnings per man shift is direct wages, whatever cost you had, divided by the number of shift, divided by the number of shift. Clear? Any doubts on this? Any doubts on this part? Done. So wherever question is asking for more than one requirement in a case scenario based MCQ within a question and they give 2 3 options, see whether you can eliminate the answer. See whether you can eliminate the answer. And if the choices are like this 36, 46, 56, 66, don't do cost of sales. Don't do the cost of sales calculation. Just focus on selling and distribution overhead and then complete your answer. In case like 36, 56, 36, 56, then you have to do both because 36, 56 you have to choose an answer and then you have to choose the other answer. Clear? I'll do question 7. This is a slightly different question and it has come 2 times in exam. X Limited manufactures 2 types of pen, super pen and normal pen. Data for the year ended 30th September is as under: direct material 8 lakh, direct labor 4 lakh 48, production overhead 1 lakh 92. It is further ascertained that direct material cost in super pen is twice as that of normal pen. Wages for normal pen is 60%, production overhead is same, admin overhead is 200% of direct labor, selling cost is 1 per super pen. Production and sales during the year were as follows: production of super pen 40,000, sales is 36,000, normal pen 120. Prepare a cost sheet for super pen showing what? Cost per unit and total cost, profit per unit and total profit. The important part is this 8 lakh is the cost for super pen as well as normal pen. Is the cost for super pen as well as normal pen. You need to identify how can you segregate this cost for super pen, how can you segregate the cost for normal pen. Question says super pen 40,000 units, normal pen 1,20,000 units. If nothing else was there in the question, I would have segregated in the ratio of 4 is to 12. I would have segregated in the ratio of 4 is to 12. But question says material cost in super pen is what? Twice as much as the cost of the normal pen. This alone, if I explain it and you understand, it is kind of done. So listen, 8 lakh is the material cost. I have to segregate this for super pen, normal pen. Super pen I produce 40,000. Normal pen I produce 1 lakh 20. If nothing else was there, you distribute in the ratio of 40,000 is to 120. But question says super pen cost is what? Twice of the direct material cost of normal pen. I assume normal pen is Y. Super pen is 2Y. Super pen is 2Y. So put together this is 80,000 Y plus I get 2 lakh Y. I get 2 lakh Y and Y is equal to what? 4. 4 is for the normal pen. Super pen is 8 rupees. Super pen is 8 rupees. 4 is for the normal pen. Super pen is 8 rupees. Similarly, wages for a normal pen is 60% that of what? Super pen. Wages for a normal pen is 60% that of super pen. Same way. 4 lakh 48. Super pen, normal pen, 40,000, 1 lakh 20,000. This time this is Y and this is 0.6Y. This is 0.65 because the wages of a normal pen is 60% that of super pen. Wages of a normal pen is 60% that of super pen. So this is plus 72,000. I think again you will get 4 per unit. Y is 4 per unit, which means for super pen it is 4 and for a normal pen it is 2 rupees 40 paise. For a normal pen it is 2 rupees 40 paise. Can you split and tell me for production overhead what it will be? Think and then tell me how much will be production overhead per super pen. Tell me production overhead what will happen. 1 lakh 92. I want you to tell what will be for super pen, what will be for normal pen. Per unit, how much? 1.2. It's split in the ratio of 40 is to 120 because there is no extra cost here. There's no extra cost here. It is split in the ratio of what? 40 is to 120. With this, the problem is over. Administration overhead is what? 200 percentage of direct labor. So whatever direct labor is there, admin overhead is 200%. I'll put a total. I'll get cost of sales, profit and sales. We have produced how many units? Sold how many units? 36,000. So in gap is 4,000 units is closing stock. The gap of 4,000 units is closing stock. One important part is wages is incurred for 40,000 units. Okay. Admin overhead is a percentage of wages. Admin overhead is a percentage of wages. I will treat this as admin overhead relating to production and take it on entire 40,000 units because below COP or below COGS it's only 36,000. Below COGS it is only 36,000. Again I'm repeating, first what we did is we had this 8 lakh, we have split into 40,000 and 1 lakh 20,000. For 40,000 units 2Y. For 1 lakh 20,000 units it's only Y. We got the answer for Y. So if you see here, after all this calculation, 8 rupees, 4 rupees, 1.2, admin overhead is 200 percentage of direct labor. We are treating it as what? Relating to production. If you write below COGS in this example, it will become only for 36,000. It will become only for 36,000, which will not work properly because My admin overhead is a percentage of labor, and labor is incurred for entire 40,000 units, incurred for entire 40,000 units. So this place, I'm taking an assumption that it is administration overhead relating to production. If you take it as general and administrative overhead, you will get a different answer. You will end up getting a different answer because general and administration overhead is not considered for inventory valuation. It's not considered. Here I have to consider this for inventory valuation. Clear? Any doubts on this? With this, my cost sheet discussion is over. I do not have any different type of questions beyond this. What you need to do is practice these questions which are there, and your ICI SM has few more questions. Just practice them. That will kind of take care. One is the format of a cost sheet. Second is inventory valuation is very critical. Inventory valuation is very critical. We have FIFO method and weighted average cost method. If you see the MCQs, you will find some of the trickier questions there. So just handle that. I think that should take care of cost sheet chapter. I do not have time to do one full chapter, but what I'll do is I'll quickly close chapter 1. I don't have anything to discuss in chapter 1. Very limited discussion in chapter 1. Maybe 10 minutes kind of a discussion we will do in chapter 1 so that this chapter is also over. Now listen, from an exam point of view, paper pattern is you have 20 marks, sorry, 30 marks of your MCQ, then 6 questions into 14 marks, 6 questions into 14 marks. In that, the first question is mandatory. Sixth question is normally fully theory question. It's normally a fully theory question, and in that fully theory question, most probably chapter 1 will get tested. Chapter 1 will get tested, which is more of a theoretical chapter. But I think there are two, three elements which I want to discuss in that theoretical chapter, something called as cost unit, method of costing. This is an area which may get tested in exam, something called as a cost unit or method of costing. So theory for your exam preparation, two options are there. Chapter 1 fully prepare. Other chapters theory, what you can do is, just give me a minute. For your other chapters theory, there is a summary which is given in the concept book. So if you can just read through this summary alone for the other chapters, chapter 1, try to read it fully. Other chapters, the summary is around, I think, 20 pages all put together. So first chapter, read it fully. Other chapter summaries from page 137 till 153, 16 pages are there. 16 pages are there. If you can prepare this theory, it can help you in answering those theory questions which may come in exam. And if it's a very lengthy paper, answering theory will become critical. You may be forced to answer theory question in exam because in a lengthy paper, answering theory can be faster, practical can take a lot of time, and if you get a very complex question, then in that case you will have to be forced to answer theory. So your theory preparation is very simple. Chapter 1 fully, and other chapters page 137 onwards, summary theory is there in the concept book. You just need to prepare that. Clear? Now coming to chapter 1, I have certain concepts here. First concept I've already discussed with you, which is your how do you classify the cost as fixed, variable, and semi-variable, and what does fixed cost mean? Any change in fixed cost means what? Any change in variable cost means what? Because it's a very, very critical area. I think I've talked a lot about it, and it will become very, very critical later on also. How do you split semi-variable cost into fixed cost and variable cost? The question will say semi-variable cost is, it will say 10,000 units, 2 lakh rupees. 15,000 units, 2 lakh 50. If it is 2 lakh and 2 lakh 50, it is not fixed. If it's 2 lakh and 2 lakh 50, it is not fixed. 2 lakh divided by 10,000 is 20. Can you tell me 2 lakh 50 divided by 15,000? 2 lakh 50 divided by 15,000. Per unit is also not same, then it is not if per unit is same, it is variable. 10,000 2 lakh, 15,000 3 lakh. If you get both 20 20, if you get, it is a variable cost. Overall cost is same, then it is a fixed cost, but you divide, you're not getting same, then it is a semi variable. How do I split change in cost? 50,000 divided by change in units. 5,000, variable is 10 rupees. So in this 2 lakh, variable is 10,000 into 10. Variable is 10,000 into 10. Balance 1 lakh is fixed. Balance 1 lakh is fixed. Or in this 2 lakh 50, 15,000 into 10 is variable. 15,000 into 10 is variable. Balance is fixed. Balance is fixed. This is like golden rules of costing. I used to take it in my first session for students. That is why it is there in the chapter 1. So 10,000 into 10 or 15,000 into 10 is the variable component. Balance is what? The fixed component. There are certain examples. Okay, I have something called as responsibility center. This can come as an application theory, that is, they'll give certain situation and tell you to classify. Now, what is responsibility center? Let's understand. A responsibility center is one, for example, when I'm doing my business, I can manage my business on my own. It's only one branch. As I keep expanding, like Reliance Industries, which is a very big company, I cannot handle everything. If I am Mukesh Ambani, I cannot handle everything. I have to give responsibility to people. So a responsibility center is one which is headed by a responsibility manager and is responsible for something. What can be responsible? You can be responsible for cost. Example, research and development. R&D department has only cost. It cannot earn revenue. It cannot earn revenue. So first is cost center, who is responsible for controlling the cost in that division. Who is responsible for controlling the cost in the division. The second type of a responsibility center is revenue center. Example, sales department. They earn only revenue. They earn only revenue. Third is profit center, who's responsible for both cost as well as revenue. Example, Hotel Sangeeta. Now, Hotel Sangeeta may open one more branch in some place, and I am responsible for that branch. So, I am responsible for cost as well as the revenue of that branch, revenue of that hotel branch which is opening. And the last is called investment center, where you're responsible for cost, revenue, profit, as well as you are given liberty to make investments, as well as you are given. See, Hotel Sangeeta gives me a branch. In that branch, I want to incur an expense of 10 lakh rupee. I'm not given freedom to do that. I have to get permission and then invest that. So if I'm given permission to invest money also, I'm an investment center. I am an investment center. A cost center is basically where you are controlling expenses. You're controlling expenses. Revenue center, generating revenues. Profit center, both revenue and cost. And investment center, sales, cost, also make investments, on behalf of the company. You have certain examples, you see all these examples, you'll understand this can come as MCQ. It can also come as the last theory question. Cost driver. What is cost driver? Is something which causes a cost to take place. When I was doing activity based costing, I said activity, total cost driver name. That cost driver name is called cost driver. What is causing the cost to take place? My inspection cost, the driver is inspection hours. Maintenance cost, maintenance hours. Canteen cost, number of employees. Canteen cost is number of employees. This will become very critical when I do distribution of cost in overheads chapter. So what is the driver of the cost? That's called cost driver. This can come in exam. They may give you industry and then tell you to calculate the cost or write the cost unit. What is cost unit? Is something for which we are determining the cost. Something for which we are determining the cost, and that is ultimately sold to the end customer. It could be a product, could be service, could be time. For example, for us, it's a combination of time. It is combination of time. So number of student into number of hours. So different industries are there. You please go through this list at home and be prepared, because they may end up asking this, the industry and the cost unit for that. And similarly, they may ask the industry and the method of costing which you have to use. The industry and the method of costing. Methods of costing, anyway, I'll be discussing as I go through every chapter. But industry and methods of costing can also come, and industry and the cost unit. Industry and the cost unit. This is very critical from a chapter 1. Understand industry and the cost unit. industry and the method of costing. Industry and the method of costing. This is kind of done. Chapter 1, I have, I think, one question or two question, which you can just do it at home for your practice today. Responsibility center, methods of costing. Yeah, only two questions: responsibility center and methods of costing. This is a exhaustive list. This is an exhaustive list. If you just go through this list, you will kind of be done with that chapter 1 application theory. Normal theory question, you'll have to read it fully. Normal theory question, you'll have to read it fully. Clear? With this, my chapter 1 is over. My activity based costing is over. Cost sheet is over. Marginal costing is over. These four chapters put together will be around 35 marks of your paper. So around 35 marks we are done. I'll be meeting you again, I think, after 3 4 days. In the gap, try to complete these chapters. Just try to complete these chapters. Once I come back, I'll then take you through the other chapters. I'll try to complete maximum chapters. Few chapters which we are not completing, I'll let you know what needs to be done later. With this, I'll end the session then.